Good morning, July 19th, 2023. We're going to be streaming today. Stock market, streaming stocks, options, futures trading, assets trade be transferred to people pay up on what? Stocks, options, futures trading, options trading. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT, and we have a free Discord. You're welcome to join. Link for both those are in the description. What we get into today, Carvana. Carvana surprised with their earnings, came out with it early. So I had that question, remember, around GME days when we didn't know sometimes when they would report. It was always estimated, and GameStop wouldn't say necessarily when they normally would, I guess, historically. So I remember thinking, well, how much notice do they have to give? And apparently not really any at all, because Carvana just said yesterday, I think at market close, that they're coming out with earnings in the morning. So yeah, I mean, presumably they thought the market would take the earnings well, and that was the reason for the hasty surprise. However, as a shareholder, I would not be very happy with that. They surprised with earnings. Yeah, you have the preparations has to be made and stuff. So anyways, yeah, but yeah, earnings were good. I think they were able to wipe off like 1.2 billion in debt or something. Enters deal with note holders to cut debt by 1.2 billion. It's kind of crazy. Loss narrows as revenue tops expectations. The numbers actually are kind of similar to GameStop. GameStop's in a little better position as far as cash flow, but like revenue and even market cap now, where Carvana's at, is similar. I don't know about their debt. I guess, yeah, they probably still have a lot more debt compared to GME. Entered an agreement to reduce its sold debt outstanding by over 1.2 billion. So I don't know how they did that though. That is neat. So yeah, it's still squeezing. I mean, this thing's been crazy. And all the options are almost in the money. So when we were looking at it before, I was like, this could get definitely into a gamma squeeze. And I'm thinking the market maker is trying maybe a new tactic with Carvana. Let me see actually. Yeah, I don't know. I mean, they'll probably add strikes today, some higher strikes, since everything is in the money, which is crazy. But up until this point, they haven't added any strikes that are higher. So I'm wondering if they've purposefully done that to try and negate the possibility of a gamma squeeze. Because we've seen before on GameStop and even other ones that we followed, they just started adding strikes right away. It was, I think, even Bed Bath & Beyond, they did it. They're adding strikes up and down the chain, and I don't know. Other ones since GameStop we've seen though, where they've added a lot early on, very early on, like not when all of the strikes were in the money yet. They started adding them, and I'm wondering if they've tried to hold off adding them to reduce the chances of a gamma squeeze. Holy crap, it's 46% now. My gosh. That's a big range this morning, even just from VWAP down here. Anyways, they have added a bunch of interim strikes, which you know, that's the money grab, where they just start adding all these I mean, look at these closer to the money. They're adding $50 ones. So this looks like this was probably added yesterday, because there's already some open interest on it. 39.5, 40.5, all these $50 ones, which is crazy. But they didn't add any higher ones. Yeah, because this 59's been here for a bit. 58, 57 they added. 54, 53, 52 they added. 49 they added. 40, and then all these $50. So they're getting their money, and if they can concentrate, yeah, the options volume closer to the money. I mean, they'll still be having to hedge, or if they are hedging, but if they don't have them too far out of the money, you're not going to have this long ramp. I'm wondering if that's why they've kind of held off. With that said, I imagine they'll probably add some today, but maybe not. We'll see. Maybe this is a new chapter in options market makers history, where they've learned another way. Mullen is not taking off. It's down 2.5% pre-market. Good morning, Molava. Thank you for your support, man. You have been the first one in chat. I think you're on like a 3-day streak now. SPY's moving up a little bit. Looks like it's back to yesterday's highs. Morning, Tasty. Good morning, Macaron. Morning, Rally. So my Bulita's cancer medication. Hold out. Morning, Ace. We'll be praying for your Abulita's cancer medication. I don't know how to say that. Is that a name? Abulita? Aunt Abulita. Yeah, and looking at barbecue. I might be closing out today to wait for a pullback. Very, very possible. Gonna try and be patient. We could get the whole handle and rip all today. I haven't heard anything about the plan or whatever that was dropped. Assuming we're not going to hear about it, but I haven't even seen any redacted documents. So I guess that's not out yet. Thanks, Molava. Oh, Grandma Abulita. Okay. Oh, she'll be good. She's old anyways, right? I know you're kidding. Yeah, Carvana's going crazy. So they had earnings. They better than expectations, but they also wiped off 1.2 billion in debt. So yeah, the options chain on that thing is interesting. Right at that resistance at this point, 58. Making this big cup. Thing really just dumped, huh? Traded around the 20s for a while, then had a rip up to 60s. They're all like, yay. It made it all the way down to $3. Wow. Mama's Mamma Mia. Here goes SPY. Broke yesterday's high already in the pre-market. Carvana did as well. Alright, I've got some plays to look through here. Make sure nothing went crazy after hours. Carvana handle around 29. Is it that low?
The ego on you.
Oh dang, starting it off strong. Mo Lava. Oh, I missed Ace. Thanks for gifted membership, Ace. Well deserved for Mo Lava. And thank you, Mo Lava, for backing it up with that very generous dono. Appreciate it, gentlemen.
Let's get nuts.
Let's get nuts indeed. Thank you guys for your pre-market support. What a pleasure to be able to hang out with you guys and do some stock trading. All right, we're 11 likes on the stream. You guys are legends. Legends. Thank you, Molava. Thank you, Ace. You started, Ace. Started the train. So here let's look at some retracement. Riley, you're calling for 30.37 because that's 50%. Is that what you were saying? 29. Depends on where I guess you draw your bottom from. I don't think it's a problem drawing from down here as the bottom of the cup. If you're gonna get a full 50%, which you don't always, sometimes our handles are very small. I feel like not even always a full 23.6%. Maybe they technically are supposed to be, I'm not sure, but yeah, I mean, if it's a 50% retrace, you're looking at 30, 37. If it even resists here, it makes it. Which might pop above it a little bit, but I feel like it probably will. I don't know though. You're getting gamma squeeze and there's a lot of other factors going on here. Good earnings catalyst. Yeah, we'll see. Blink is up 1.3. Pre-market. Couple's up 2.5. Just sold my plays to close that out. Well, Punk was up 1.25. First Solar's up 1/4. Fisker's up 1%. Dopey's down 7.5. News on this? Lucid's up 2.25. Lyft is up 1.7. Next up 1.25. Nothing on Rad. Rivian's up 1.3. Run's up 1.5. I didn't like this candle that Run made yesterday. I mean, that's like an awful thing, man. We'll see. Naps up 0.75. Teladoc up 1.2. Zoom's up 0.5%. BBIG's down 2. Still liking BBIG. This is like one of my favorite charts right now. GME's up 1/4. Buy's up 0.15%. SMX is up 54%. Oh, that's SMX. What in the world? No news on why that's up? Securities manager received notice of allowance for a U.S. patent. Is that it? For a patent? Is that the name of this company? Security Matters? What do you know? Security Matters. Wow, 57% on SMX. Bag holders unite. If you're holding when we traded it back here, you've just been given a gift. A gift from the gods. high roller. I don't have enough capital gains to warrant the capital losses of or the expenditures of or expenses of a Bloomberg terminal. No, not at this point. Eyes ripping into open. Got about 3 minutes. I'm set up, well prepared. Now barbecue is kind of at the top of a cup here, so not sure if we're gonna kind of need to break out, or we're probably gonna see a retrace. Maybe as deep as 32 cents, 32.48. That's where I'm thinking about closing and maybe jumping back in on a retrace. SPY ripping in the open. On SPY, we're just seeing if we're still in this kind of breakout of this cup and handle. This larger cup and handle we broke out of. Getting up to some resistances though. So it very well could have a couple of retrace days on itself. The gap fill down here. Move back down to test the breakout, could be coming soon. Still a lot of earnings. What earnings were this morning actually? Maybe something good. SPY's ripping. Can barbecue do this? I haven't been streaming that long, Mac around, but yeah, I've been putting out YouTube videos for years. That's true. All right, market is open. SPY's up 0.25%. Barbecue is flat. Carvana is opening up 31%. SMX is up 62%. Good morning, J Souls. Good morning, Bruce B. Really like to see barbecue break this high, or yeah, we'll see a pullback. BBBYQ is down 1. Maldirect's up 6. SPY's rallying. I just don't know like a good cutoff level to the downside, unfortunately. Holding yesterday's support, of course, would be nice. I just ripped out of the gate there. Bubo's up 5%. Peloton's up 5%. I just ripping out of the gate. Morning, Drew. Thanks, man. AT&T had earnings are up 7%. That's a big move on AT&T. Bubo 6, Nikola 6. Carvana's coming down a little bit. Definitely some profit taking this morning. Those options. Yeah. X up 0.5%. Volatility up 2. Be nice if it held above that breakout. Run's up 2. Same thing with run. Let's see, hold above there. Lifts up 1. Ups up 1/4. Barbecue just right around VWAP. Around open. Zooms up 1 1/4. Links up 2. Carvana bouncing off VWAP, SMX coming down a bit. Direct's up 7. Barbecue's down 2. I want to see it hold this level. How about that Carvana? Yeah, 41% on Carvana right now. Rackspace is up 6. Peloton up 6. Affirm 6%. Dude, Carvana's volatile this morning. It doesn't look like big moves because the pre-market was so big, but these are big moves. It's swinging like 10-15%. 7% on Nikola. Carvana coming down some more. Arms up 6.5. Barbecue holding on. Let's see, we got Beyond Meat there. Beyond Meat's up 5.3. Did I sell those? I don't have any more Beyond Meat. Is Vroom going also in Sympathy? Kind of. It's so weird how this one's like literally just like its little brother to Carvana. I see no other reason for its rally. They hit SPY just straight up. Workhorse is up 7. New high of the year on SPY. What's pumping it? Netflix and Tesla are selling off. Got IronNet up here. IronNet's up 7. ECAT's up. Beyond still up. Blue Apron. Carvana's coming down a little bit. Got a gap fill down to 39 bucks. Barbecue's holding on for now. It's down 2%, but still in yesterday's range. SoFi's up. Lyft is up. There you go. Lyft's up a little bit. 3.5. Good to see. Snap, yeah, what's Snap doing? Snap's up 0.25%. Earnings next Tuesday. I want to sell these calls maybe this week. If we get a rally at the end of the week. Chart looks nice though, so might hold off till Monday or Tuesday if it's earnings or after hours. I'm not sure. Adds up 2.5. $2.5 on Teladoc. 1.6 on Zoom. Flat on NAG. $45 on SMX. And Carvana's come down some. It's at 22% green. Root's up 13%. Oh yeah, do we have a root? Oh yeah, I still have root in my long term. I'll probably be selling that out at some point. I'm slowly winding down my long term. Gonna just start data farming it and maybe start accumulating long-term stocks again after the frothiness is settled. But we could, I mean, we could still have months of pump before then to get us back to all-time highs, which, I mean, we're the velocity that we've been on for the last like 2 months, not even like 1 month, has been crazy. So it's not going to take long if it continues this trend, but we'll probably get a big pullback somewhere before the top and some consolidating, and then maybe a blow off the top. Morning, Maui. Root, Sympathy. I don't know of Sympathy to Root. Root had that big pump because there was speculation of them being bought out for like 19 a share, I think. But I haven't heard anything since then. That's up 12.5%. That's nice. Landscape mirrors their climate strategy. That's how it works. I straight up, man. Lift calls are starting to wake up a little bit. Yeah, Lift's rallying some, 3.5%. Arrival's up almost 7%. Workhorse chart actually looks pretty nice too. This thing has been a squeezer, a prior squeezer. Nags down 1.5. Still looking good. Three and a half on Lyft now. Got some gaps to fill. Blink's up 2.5. Barbecue's still hanging out there right around VWAP, 1.3% down. Hadouken! Run is up 1.5. Root's kind of ripping now. %12 on Root. I'm Root. RXT's been on a nice trend. Whoever mentioned that a few days ago. Breaking out of that bull flag. Looking good. There you go, BBIG. 4.5% on the old Vinco Ventures. Dude, we got Upstart even playing along today? Holy smokes. 7.5% on Upstart. Wow. It's filling that gap. Get rid of that, doesn't care about that cup. I'm gonna kill you. It didn't even kill me. Upstart's ripping, man. Crazy. 3.5 on Lyft. 4.5 on BBIG. Carvana holding up there, 30%. Barbecue at the top of the range now. Really like to see a breakout here. If we get this break, I think 56 cents is this week. Soon as today. Yeah, this will be a new OTC high. Bought it at 460. But you need in a short time frame, don't you? Come on, barbecue, join the party. %9 on a firm. Butu's up 8.5. That kind of a breakout spot also. 13.5% on Root. 3% on Lyft. %3 on BBIG. There you go, barbecue. Barbecue's green 0.5% now. We have green. Hogan! 38 cents on barbecue. There you go. 38.45. This is it. That's the high right there. We just touched it. What's it gonna do? Oh, Fi's making yearly highs. Barbecue. Barbecue is flirting with it. It did hit 38.45. There it is again, 38.45. 2%. Might be a big candle if it breaks it. Tiny candle. Went up by 0.10, 38.50. Okay, the next candle. We did. New OTC high though. We did it. 38.50. Barbecue hit it. Up 2%. 38.80. There we go. Now the candle's growing. Alright, as this grows, I'm gonna get rid of the fib levels because we're not doing any more of a handle. We've done the handle. Or we haven't, just didn't need to. 38.98, it's breaking out now, 3.5%. That is neat. 39. Time to zoom out. I think I can safely get rid of that. Well, not safe yet, actually. Really need to make sure this is support. It comes back down. 39.50. 4.8%. There is some liquidity in this area over here after this gap. But until the gap, it's pretty dry, so 44 cents could come quick. And might slow down a little bit before 56 cents. If it holds above here. $39.98. New OTC high. Well done. Got the Koreans in here. Or is that Chinese? To the moon. 39 cents. Let's see. Need it to hold here. It's a false break. Which gives them all the liquidity they need to just dump it. Don't do it. OTC high though. Well done. Well done. If you look back, before OTC, yeah, I mean this was on a a pretty good rally before we went to OTC. Went from 24 cents up to 56. Went 100% in that time. So we're well back in the area. I mean, not really, I guess. But we've climbed a long ways from that low, 4 cents. Does it want it? It's kind of bull flagging up here. The glorious 50-cent call exercise. I hope people realize it's not, I mean, yes, it puts pressure on the market maker, but you're exercising a call. There's no reason to before the expiration date. But I imagine a lot of people that don't know that will be exercising their calls, their leaps and stuff. Let's go barbecue. Ow, wow, wow. Oh, it's fighting. I had that 38. I mean that is on the penny, but you can have a little margin of error. It can be this whole area. It's good to see it broke out at the upside. Want to see it find some support. 38.40. I'd say. Yeah, or it could just be like a melt up day we had here. Very strange. Hey trays. Let's look at the options though on here. So, oh, they got rid of the weeklies. That's what's crazy. How did they just get rid of those? So if you had weekly options, they're just worthless now, I'm assuming, right? Or did they just send you a letter in the mail and say, sorry, we got rid of your options? I don't get what happened with the weekly options, but anyways, I guess, or July. What happened to July auctions? Their options, what? They're just disappearing off the chain. Weird. Well, for any kind of gamma squeeze to happen, we need to wait till August monthlies now. Really after that, but if there's only monthlies, it's gonna be more difficult. Huh. Root's at 18%. This is the way. Wait, did I actually close root yesterday? No, I didn't. I held it. Okay. I'm still so far down on root. Had a reverse split, all sorts of junk. All right, barbecue, what do you got? Up 2.5%. Percentage isn't as important to me as that level. Gotta see some levels hold. BBIG's up 2.5. Lifts up 3. Upstart's up 8 now. Fubo's up 8. Wow, Upstart's ripping. Jeez, that gap's getting filled. There wasn't even much of a consolidation on the daily. It was shorter time frames. It was like 1 day of consolidating. This is kind of a big break for Upstart, actually. 54 level. This thing could really start to get even more nuts. What's coin doing? Coin's kind of going crazy too. 4% on that thing. Full flag up there. Also at that high. 17% on root. Fubo ripping here, 8.25. There you go, barbecue. Just barcode up there. A little bull flag. No problem. SPY new high of the day. There you go, barbecue. Do it. Barbecue 39.75. 39.35. Workhorse 10.25. Beyond's up 7.8. Groupon up 7. Fubo up 7. SPY breaking out there. Carvana consolidating. Right on VWAP. Barbecue at the high of the day almost. 39.79 up 5.5. Ace with leaps are only hope for game of squeeze. Yeah, I mean, it's not till August, which is kind of crazy. Do it. Do it. 40,000 shares at dip this morning. What dip? Nice, well done. Are you selling it right now? Buy melt up. Yep. Been more of a heavy, steep climb. But yeah, I can't actually see XRP on Webull. Groupon's up 8. 18T's up 8. Dude, that's crazy. %1 on BBIG. %15 on root. Done with neg? No, not at all. What's it doing? Down 3%? You're not done with neg. Neg is just getting its legs stretched out here. Bit of volume, bit of breakout. Now some consolidation is in order. 1% on BBIG. 15% on root. 15% 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 15 This is the only reason why the weeklies I was saying are sketch, especially out of the money. But you still have 2 more days. Got today, got tomorrow, got Friday. Kim Kardashian underwear company valued at $4 billion. Wee. Back in a bull market. Oh, my title. Sorry, let me put it back on. What did I put on there? I'll put a Carvana. Yeah, Carvana. No, Neg was the one I put on yesterday. Today I put on Carvana. Oh, I'm watching Neg for sure. Yeah, my calls are actually holding up good value too. Only down 7% today, which is nothing. Or it being down 2.5% for how much they've come up. So, looks nice. I guess these are in the money, so that helps. I've got a lot of options right now, so I can't focus too much on just one. Oh, I need a trim, but there seems like a lot of opportunities. Snap. How are those calls green? I'm just getting IV increase now for earnings. Underlying is not even going up in value. Just the premiums are, which is what you want to do, what you want to see. The pre-earnings premium pump zooms up 1.5. I'm seeing that on Snap right now. Teladoc up 2.5. Just trying to stack so the squeezes. I get my blink calls. I don't like blink. Maybe run some covered calls on BBIG. Barbecue, just Barba flagging up here. 5.5%, 39.75. Eye on a melt up. New high of the year on SPY. %9 on Groupon. I'm breaking out there too. Barbecue at the high. About to break out. One up 2.8, root up 16. Watch 1.5 calls expiring this weekend. Hold their value, getting snapped up for 10 cents each. I don't like the 5-cent spread for, especially for scalping. Max holding up, barbecue still on a flag. They just get stopped out of my long there on that candle. On the MES. Diversification. 3 green days in a row? Are we more than that? This is number 5. That was number 6 if it stays green. And some brokerages, you guys were saying this day was green. 7-Eleven. I have 7-Eleven as red. But we have 12, 13, 14, 15, and 16. Sorry, there's a... Wait. Yeah, 12, 13, 14, 17, 18 were green. Today's green, that'll be our 6th day. Yeah, as far as like weekly, I think this is the let's see. Yeah, this potentially might be our 2nd green week in a row. Be very neat. I guess we've done that though since OTC. Not with this big of a weekly candle though. Buys come down a little bit. Morning, buzzin'. Happy hump day to you as well, sir. Was there still nothing, no new dockets or whatever from barbecue stating their plan that we're not gonna be able to see? Just a big blacked out filing. $0.39 on barbecue. This was not what I was expecting with a breakout. I don't know if it should have me concerned. I don't know. Seems fine. Seems good. It's holding up above level. Volume's not crazy, but that should come. BBBYQ up 1.5. Neg's kind of climbing back up a little bit. I wanted Neg to kind of hold this 1.5 level. Or where was it? Yeah, I guess just the 1.5. Way down here. Lift is in a nice bull flag. Run is starting to rally. Barbecue came down a little bit. 3.5 on Blink. Three and a half on Rad. App up 1%. Zoom up almost 2. Solidoc 2.3. %15 on Root, and 11.5 on Groupon. At 2:30, I guess they said 24 hours, so sometime by that time. There are halts. Yeah, there's not. There's no limit halts. You can halt it for other reasons, and if it goes crazy, you can be certain that they will. %8 on AT&T. Oh, did Verizon pump up? Nice. Dish is up 4.6. $1.3. 1% on BBIG. Workhorse. 16% now. Chart looks pretty good. Yeah, the premium on these snap calls. See it just holding value. Lift kind of breaking out a little bit today. 3.6. Runs up 3.5. Up is still going. Look at this thing, 9%. Barbecue melting back down to the bottom of its flag. If it bounces here again. Upstart 8%, Lucid's up 9. Rackspace up 12. GME doing nothing. Looks like it went up and tested that line again this morning. Wow. One and a half on BBIG. Little bounce on barbecue. For some reason I thought there was another court hearing today. Barbecue on the bankruptcy court hearing. Is that not true? Barbecue confirming this bull flag. Up 4% and 39.20 above the candle or above the cup. Really in just breakout territory. Just keeping it really mellow for now. CO6. Short in Netflix. You holding it through earnings? What they have earnings like tomorrow? They have earnings today after hours. Head and shoulders. I mean on like, I don't know. I don't see any. Got some volume there on barbecue. Eyes come down a little bit. Palantir. 4.5 today. Yeah. Well, it broke the RSI divergence, so it's looking much more bullish now. I don't know if that was you asked me about the other day. I didn't like the setup to go long. It was at a resistance and it had that RSI divergence. Broke through that resistance and that divergence. So yeah, looks good. Looks bullish. $20.5. Got room to the upside. Percent on Groupon. Upstart's 8.5. BBBYQ coming down a little bit. Get back to safety. This PacWest doing? Wow, PacWest, no way. Is it the banks that's pumping SPY right now? 6%. There are more bank earnings this morning, huh? Lower. I mean, had a nice bull flag yesterday, which just broke out of today. So lower than open? I don't think so. I don't know what you mean lower. Also, is this breaking out of this 930 resistance? We've got a lot of liquidity in this area between 9.5 and $12, so could slow down in this range, but it will get up to that range. It looks like it's going for it. Was that your short call? For a loss? Yeah, I can't answer that for you. I can always roll it up. That's usually what I do if I'm down on short options. Roll them. Just sell more time. Not that you weren't wrong, just you were wrong about the time, and that's what the short options give you. They give you the option to be wrong about the time, pretty much. You just keep rolling. A loss, yeah. I try never to do that. Barbecue back down. Bottom of the bull flag. Like to see it hold here. You shorted PacWest? after the initial drop. Did barbecue just test VWAP there? Was that during my sneeze? Technically, that's the bottom of the bull flag. Not where my line is. Spies maybe sent up a little head and shoulders here. They've got a little bounce back up to 456. Stop loss honey. On barbecue, I don't. Oh, because it just wicked down there. Doesn't look like it because now it's coming down there. It wasn't a very big drop for it to look like that, anyways. Pretty big volume in those last 10 minutes. Sounds good, Southern. Thanks for the support, man. I just closed some of my barbecue. Fly back down to VWAP here. There's VWAP on SPY. I don't like how weak this breakout is. Rebounds on VWAP. On SPY, maybe. Barbecue. We'll see. Square looks good. Might have some more consolidating before it keeps going, but looks like it wants to retest some of these levels up here. Maybe the 90 level. Probably have some pullback though. Running pretty hot. Just consolidating now. Chopping around. Climbing back up. In the house on SPY today. For going up or down. I see Carvana moving around. There you go. Yeah, Carvana bouncing off VWAP. Little double bottom there. Just these intraday moves you could scalp. Barbecue at VWAP. It's tempting me. I pulled some out. Which I could put back in, but calls on what, Cameron? 18% on route. Lifted at 4.5. Run is climbing again. Nice. Oh, Pac West. 9% on Upstart. AT&T almost 8%. That's a huge move. Blinks up almost 3. Lift, there you go, getting the lift. 5% on lift. This is the way. Apps up 0.5%. Zoom 2.5. Teladoc 1.9. Eye chopping around. Barbecue at VWAP. Still kind of in the breakout area. But the breakout is really weak. AFS. %14 on Groupon. Look at this thing. Ah, Trupanion. Look at you. 7.5. Big Lots is up 7 also. Yeah, Lyft is lifting 5.25. Certainly on its way to fill that gap. Another little resistance up here. And there's a lot of trading in this whole area, so it does have a gap fill, but a lot of volume traded in here. King? The ticker king? Or he's been awesome. TCJH? remember looking at this one before, actually. I don't know what you're talking about, though. 17% on route. 12 on Fubo. Peloton and Nikola. Carvana looks like it wants to keep going now. Above VWAP, building the bull flag. Pre-market high was 59.30. Groupon still escalating. 14.5. Oh, barbecue back above VWAP. Upstart almost 11%. Fubo up 11.5. Next down 1.5. Up still looking good. 8.3 and Trupanion 8.2. I almost went long on Trupanion the other day, but I was double top and I saw this bear flag being built. I was like, eh. Then engulfing candle. Just being still in this uptrend. Little bounce there on barbecue. There's a SPY. There's your gap filling on SPY. Dang, I wasn't paying attention. We had that head and shoulders perfectly nailed. Even the bounce on VWAP for it. I like that bounce on barbecue. Bounce just in time. By making a little inverted cup here. Got the little head and shoulders up here. See if we get a handle. I came down with some velocity. WPRT. Westport Fuel Systems. Had quite the rally. Oh, a little reverse split squeezer, huh? Got some earnings coming up. You have calls, J Souls? Yeah, Lift is kind of doing it. I'm back down to VBOP for now. But yeah, starting to fill that gap. Just forming a kind of a handle here. Potentially. I like the barbecues holding this up. Had me scared there for a bit. BBIG now down 1%. See if it bounces and continues this trend. I have $8 for daily on this account. $8 in a dream. What? What just happened? Barbecue bouncing up there. $4.52. $39.28 on barbecue, 4.25. Looking like a head up here, shoulder here. Could be forming that. Let's see if we build the right shoulder, that gap fill. Meantime, we're just maybe making a little inverse handle here. Nice, Hugh. Well done, man. So far good for a short? Maybe. Can't really answer that for you. I don't know your situation or your plan. Looks like it's made a cup here. So, yeah. I'd say a short, but you might need to exit it pretty shortly because it might be making a handle. Get more bullish. These long wicks. Buy it. Going with the spy put YOLO. $5 YOLO. %15 on workhorse. Group on 22%. Wow. Wow. Big breakout on Groupon there. Roots 17%, workhorse 15.5. A pretty big break on workhorse also. Turbo's up 12. Upstart's up 10.5. Still climbing up a bit. Setting up a bear flag here though under VWAP. Barbecue getting closer to the high of the day, 39.49 up 4.79. Were people jokes today? Eyes climbing back up a bit to VWAP. Maybe forming a little inverse handle here. 50% of that drop would put it right where it's at. But the other side of this cup, we'll put it at 455.68. Oh, just above VWAP. %, on Groupon.
Backing down on that overuse. I think, you know, when you doubt Netflix, they have a history of doing really well.
Yeah, I had to text my brother when I could no longer get into his Netflix account. All right, so in terms of technicals, fundamentals, you say it's time to be risk on versus risk off. You sound pretty bullish.
Well, it's sector to sector. I wouldn't be jumping into those FANG names, those magnificent seven at these levels. Even though Microsoft, however, did break out of a nice rounded bottom, I would wait for pullbacks to enter. They do have earnings next week, but industrials look extremely strong. The transports are strong. The small caps and the mid caps, I think, are the next round of leadership. They're going to play catch up, and there's a lot of money on the sidelines. We hear this all the time. And where are people looking? They're looking at those Carvanas, those beaten down meme stock ARC names that have a lot of room to reverse. So when you look at the charts, you look at rounded bottoms, stocks breaking out of nice bases above the 200-day moving average, they do have room to run, and they're set up from a nice risk-reward entry point that, okay, you can limit your downside if you're smart and you're on top of these trades because they are risky. But the upside potential, like we're seeing in a Carvana, who knew, is pretty good.
All right, we'll leave it there. Jay Woods, always a pleasure. Thanks so much.
My pleasure.
That's Jay Woods of Freedom Capital Markets. Plenty more to come on Trading 360. In our 360 Spotlight, we'll take a look at restaurant stocks. We'll talk to the analyst at Wedbush who covers the space to get his thoughts on Chipotle, Domino's, Texas Roadhouse, and more. Today's disruptor is ServiceNow, making new 52-week highs following a few price target
grab another daily spy put. That one closer to the money. 454. Very mellow breakout on barbecue.
Yesterday we had a bullish call on gold and silver because of the breakdown in the dollar. Today it's on emerging markets.
So maybe retrace too far technically for a handle, so could just chop around for a bit.
Well, the breakdown in the dollar has been key, especially for some of the other markets that we look at and the relationships they share.
Not sure yet.
In this instance, though, we're starting to see the dollar actually rebound a bit based on the weakness in the British.
Still have the head and shoulders up here.
From the expected CPI data overnight, but I'm looking at EEM and I can see what Don's talking about in terms of the trend up and
Liechtenstein.
shorter term basis, but the longer term is still very well defined trend to the downside. So I'm going to lean on that. Let's begin first and foremost with the more granular. Here you can see again, in reaction to some of what we've seen in terms of the US dollar, the weakness EEM has been in a bit of a trend environment to the upside. You can see it's pretty well defined here. Let me take a look here at some of that. Give me a second here, Caroline, as I pull up the areas of consolidation. Don, you can see we've been and are forming areas of these value areas at higher and higher levels. So again, this is a 15-minute candle chart. I don't want to get too focused on the more granular aspect. Even though as we step away here into the bigger picture, more intermediate hourly time frame, similar pattern, right? Migration of value to the upside. But this is exactly what the bears are looking for in this instance because, well, let me show you as we've now found ourselves testing a key high and, well, you can see we got above it, but stalling out a little bit here, which is what would concern me. Also unable to take out the highs that we saw earlier this year. Keep in mind this $40 level coincides with the highs that we saw this time last year. Failed to get above the 43 level. So again, you can see these areas of resistance have started to kind of stack up in this instance. If the dollar starts to recover off these lows, if EEM starts to roll over, takes out 38, it opens up a door for a retest potentially of the lower extreme of the range that we've been in, going all the way back to, well, again, this time last year, and ultimately that's the October low. So this is what has me a little bit more concerned. Can I see the bullishness on the short term, the more intermediate? Yes, but you've got to give the benefit of the doubt to the bears here in terms of this longer term trend lower.
All right. Not an agreement from Ben, but just want to ask you really quickly as a follow-up. Obviously, that's a breakdown on the dollar call, but is this also a sign that maybe you're looking outside of the U.S. for opportunity versus here in the U.S.?
No, I'm not really substantiating too many trades in emerging markets at this point in time. You know, one of my other thoughts in here is that, look, if the U.S. continues to kind of propagate gains,
39.47 on barbecue,
S&Ps, which is becoming, I mean, really what we're seeing in the S&Ps. I know your previous guest was incredibly bullish, but, you know, as a trader, it looks a little bit more like the theater of the absurd in here. I think that if those gains continue to sustain in the S&Ps,
3.5, Zoom's starting to wake up.
Drag even emerging markets to the upside, as there's less places to go right now in terms of
Runs
U.S.
at
markets
4%.
that are not in like incredibly overbought, terms.
The theater of the absurd. I like that. All right. So maybe why you're also turning to fixed income and not just
lift 4.5
fixed income, but all the way down out in terms of duration. The 20-plus year
Black
Treasury
back down to
ETF,
VWAP.
ticker symbol TLT. Tell us why you're bullish on this one.
Yeah, as a retail trader, I have tendency to look much more at the TLT than I would at, for instance, the ZB or the ZN. The ZN, of course,
You
being
don't trade futures,
the
man?
Treasury bond, the bond versus the notes. The TLT, I think, is a little bit more effective though for the average retail trader to trade. That and it's a nice defined risk spread we're going to put together on this. So inside of the TLT, I'm actually looking for a bullish spread, simply because I think, the economic slowdown, okay, just we haven't had it yet. I mean, am I supposed to believe that, the raising of rates is not eventually going to infiltrate into the economy? I think right now, if you look at the S&Ps, as I said, it looks a little absurd out there. We haven't seen a slowdown. Now we're actually, it's a recession. It's not a recession.
There's a VWAP on
Maybe there's going to
SPY.
be a recession, and all of a sudden that's off again. Again, I think we're in an economic slowdown. I think you're seeing that to some degree at this point in time. As I said, though, it is really, and I've been saying this week in and week out, it still is maintaining the 7 stocks that are to the upside. That's what's ultimately propagating gains inside of the S&Ps. Nevertheless, here on TLT, this is a bullish call for bonds to kind of continue to rally as an economic slowdown kind of sets in. This is the September 15th expiration. I'm buying the 105 calls. I'm selling the 108 calls. So it's a $3 wide spread. It's done for a 70-cent debit.
Okay, so Ben, Don is looking for a bullish spread in TLT. What did the technicals show you?
Well, this is another example, Caroline, where we're seeing a little bit of bullishness and a little bit of trend momentum to the upside on the more short term, but the longer term, again, when you look at the daily, when you look at the weekly, no indication, rejection of the working assumption that this one continues to trend lower. TLT has been coming under pressure and has yet to reject. Let's start off with the bullishness in line with Don's suggestion here and the position he's taking. You can see from 98 recently up to 102. No rejection of this more intermediate, more granular trend up here. And I went ahead, as usual, with identifying some of the areas of consolidation that I have here on the way up. Actually, let's avoid that. Let's just get into a longer term time frame here and take a look at the daily, because I want to show you again, while we have started to inch our way up here, it's just a very small blip on the longer term, bigger picture radar in terms of trend lower. You can see, looks like about every $10 on the way down, we've kind of stopped and regained composure. You can see how we've been sideways for basically a year here now around this 103 level. Now, in the instance, again, in terms of EEM, we were talking about key areas of resistance, right, that they were failing and unable to get up above and starting to roll over. In this instance, we're stalling out here, potentially running into resistance here around this key area, the pivot around 103. I wanted to show you what's going on with the weekly, because it's not just, again, this move lower that we're looking at here last year, the beginning of last year on the way down. Here you can see on the weekly time frame these large areas of consolidation that formed. Again, as long as we're balancing around 103, we're currently referencing 115. Anything below that is very supportive of this bearish narrative that the chart's kind of suggesting.
Like we're just kind of in a range now.
Migration of value to the downside. Working assumptions that we're going to break out, take out the 91 level, form a new value area at a lower level. That's what the bears want to see. Again, they do not want to see this one back above 115. Got to lean on this longer term trend here, Caroline.
Don, want to give you a quick chance to follow up there. And also, just in terms of that recession talk, do you trust the inverted yield curve? Is a recession coming?
Yeah, the inversion of the yield curve is exactly what I'm looking for, and that inversion to even expand out to some degree. And that's exactly why I think that the TLT is going to continue to rally, as ultimately we're going to see that longer end of the curve kind of cool off a little bit in terms of rates, as traders come in and actually start to buy notes, start to buy bonds. Again, cooling off the interest rates and the longer end of the curve. The short end of the curve, look, the Fed is still actually, they're going to raise. We know they're going to raise ultimately on the July 26th meeting here at this point in time. So again, I'm going to enjoy taking the other side of Ben at this point in time.
All right, let's talk about your final trade, Don. You're looking at the tech sector for this last trade, ETF XLK, more of a bearish trade. Fill us in.
Oh, yeah. If Ben didn't like the previous two, this third one, this is going to put him right over the edge. So in the XLK, this is a big, big bearish trade. I mean, as I said, earlier, time and again, that markets specifically to the Nasdaq, it's become really absurd, and a lot of this has to do with what is termed a dispersion trade, which gets a little bit complicated. We start looking at things called gamma squeezes, dispersion trades, but when you're looking at the QQQ, or for instance, in this case, the XLK, that the upward momentum, okay, is much more about an arbitrage. It's about a trade, and it's less about an investment. And eventually that trade will collapse as volatility continues to kind of contract inside of the broader marketplace. With that, when the trade kind of collapses, you could look for the technology sector to have some degree of reversion to the mean, a big sell-off in here. My XLK trade is for the September 15th expiration. It's buying the 175 puts, selling the 165 puts. So it's a $10 wide spread. It's done for a $1.65 debit. These are the kinds of shots I like to take and I do like to take them, of course, in the midst of opposing momentum. I can see the market right now exploding to the upside. I'm going to take the bearish shot before we actually start to drop, because at that point, effectively could be too late and volatility could really pick up, making a spread like this significantly more expensive.
Good point he makes.
Ben, are you on the edge? Don't go over. Fill us in on the technicals first.
Don, my reputation precedes me. I'm a trend follower to heart, and this one is to the upside across all time frames. In this instance, it's not necessarily even creating that confusion with the more granular, suggesting one and then the bigger picture the other. I always lean with that longer term trend, you know that, but here in this instance, we've got multiple time frames as mentioned. Take a look first and foremost at the 30-minute, and you can see a very well-defined trend up here, right? I just went ahead and mapped out two areas. We're kind of stalling out here, potentially around 180. I left that with some question marks, but you can see the breakout. You can see how we took out the highs from back in June, back in earlier of last month here. That was, where was that? That was up around 175 here, and we're holding above that level right now as we speak. Taking a look here, we're now into a 4-hour candle chart. This goes all the way back to the beginning of the year. Look at the migration of value. You can see the breakouts and just
okay, Liechtenstein.
Slow grind.
They're just trying to front run it.
In
this instance, from back in the middle of May, there was some conviction to the
front running the drop.
These higher highs, higher lows, transition. Wash, rinse, repeat, we're talking about again. And even in this instance, the energy associated with this move up here, notable to say the least. So breaking out of a range that we had been in around 170, this is a vertical move to the upside. Again, as I mentioned on the last chart, possibly slowing and bouncing around that 180 level, something for the bulls to look at. And again, guys, keep in mind, we want to see the bulls, that is, want to see an area of consolidation form at this higher level around 180. Sideways at this point is not a bad thing. It's acceptance of and kind of
fine moving up there a little bit.
Assumption that we're trending higher, acceptance of the breakout here to the upside. Lastly, taking a look at the bigger picture I mentioned here, multiple time frames are trending higher. I mean, when you see this, you've got to take a step back and take note of this, because this is, in my opinion here, important. Taking a look here, going all the way back to 2017, you've got 4 very well-defined areas of consolidation. You can also see the attempt to break out here right now and take out highs from the end of fall of last year, so, or 2021, I should say. Let's watch this. Now, Don could be right? We could top off. We oftentimes see a breakout fail, but there's energy to the upside here right now. Again, I like to give the benefit of the doubt to the longer-term trend. In this instance, it is bottom left, top right. The bulls are in charge, it looks like, Caroline.
All right, trend follower Ben Liechtenstein and Don Kaufman, who could be right according to Ben. Thank you both so much for being here. Really appreciate it. Coming up next, we're going to spotlight restaurant stocks. We saw some news on international expansion from Chipotle yesterday. We'll talk to the analyst at Wedbush that covers the stock to get his thoughts and what other stocks are well positioned.
Spy climbing up here. Yeah, we're just choppy. Chop, chop. And one nice little volatility move to the downside. which I saw come with that head and shoulders. I just wasn't quite prepared, and then it just happened so quick. But oh well, it had been a good exit on it too. And there you go, your calls, your SPY calls. They're working. Oh, Burlington, that's a good point. Yeah, who else is on there? And we saw what it did to Overstock. We've got Burlington. I can't remember now. Marshalls, were they on there? Overstock, I think, had the big move just because the IP. Just buying up leases. I mean, I guess I could be somewhat bullish, but probably not to the same extent. Yeah, the chart looks bad. $11 billion on Burlington? Wow, dude. I know this is such a big company. Yeah, they have good locations, but I don't know if that'd be a big catalyst. I don't know. You could play it, get some exposure. And some of the other ones, I don't know if it was Michaels. There's Burlington owned Michaels. A couple of random ones, maybe they're not public though. $16 million flow. Undervalued? I don't know if it's undervalued. They're not turning much of a profit. Have a lot of revenue.
On the street, I saw 64 over at Raymond James, but otherwise 62.
That looks pretty good though.
One of the top ones, Renita Young. Thanks so much. It's time to spotlight restaurant stocks, and for that we welcome in Nick Setyan, Managing Director, Restaurants Equity Research at Wedbush Securities. Nick, thanks so much for joining us.
Something very interesting.
Thanks for having me.
So we have quite a few.
These 451 puts have not lost any value, just because I think they're so cheap. It's hard for them to lose much value from there.
We know they still want to travel, but are they still eating out?
So if we get the trend right, getting maybe out of the money.
Yes, in fact, you know,
Pretty far out of the money on the dailies.
Across, you know, June on here into July has been remarkably strong. You know, March through May, it was a little quiet, but you know, June actually ticked up quite a bit, and seems like, you know, July has held up here. So, you know, transactions have accelerated from sort of the previous 3 months in June. And it does seem like expectations are more positive in terms of restaurant spend than they have been in a few months.
All right, so in terms of individual names that you like, Chipotle, of course, has been a big winner this year, up about 55% year to date. You think it still has more room to run? I was looking, you have a price target of $2,300. Of course, just announced plans to expand internationally. Tell us where you draw your bullishness from for Chipotle.
Yeah, well, we're seeing accelerating transaction trends through the end of the year. The pricing actually has been relatively muted this year, so they've regained that relative value advantage that maybe they lost a little bit over the previous couple of years because they had to take so much pricing. And so as that relative value gap continues to narrow versus the competition, we think transactions are going to accelerate ahead of expectations, and we expect that in Q2 as well. So we expect the top line beat. Margins, the commodity basket has been fairly benign, much more so than we expected going into Q2, with the exception of avocado costs. I just think the rest of the basket's going to offset the incremental headwind from avocado costs. And once that there's a seasonality pattern there. Once that normalizes, I think there's upside to margins in the second half.
Dude, love the drone shots, man.
All right, your top pick, though, is BJ's Restaurants, ticker symbol BJRI. I have to be honest, I'm not familiar with this one unless they operate maybe names that I do know. That's up more than 30% year to date. Tell us why this is top of your list.
Sure, it's a casual diner that's been written off, trading at under 7 times EV/EBITDA. But there's a group of those casual diners that have been written off. Among those, I think BJRI is the winner. And so, my checks are coming in very strong. I think they exceed expectations in Q2. I think they have enough drivers in terms of the comp to exceed expectations in the second half. I think there's going to be a pretty meaningful margin tailwind here. There's a lot of pizza that they sell. It's essentially
We're more than great coats.
With a lot
I don't even know what they
pizza.
sell in there now.
Cheese, flour, those are all down.
Is Barnes and Noble, is that same one that Barnes and Noble
cuts aren't as
education ticker
would be going into Q2. So
at a different company?
Bottom line, I think it's going to be a straightforward beat. Numbers revised higher.
Priorities?
Not just for 23, but 24 as well.
And speaking of casual dining, Domino's and McDonald's also on your list. Both winners
From
this
their
year,
drop and pop?
haven't seen quite as impressive in year-to-date gains. Tell us why you're bullish on those.
Yeah, well, McDonald's.
Is that the cows for Workhorse?
So as
Yeah, the Workhorse chart looks nice.
Less defensive positions. I think they're going to rotate out of McDonald's.
Yeah, they don't.
But the fundamentals
Yeah, they don't have much margin at all.
So
Until they have
as
tons of
we see
revenue and hardly any money.
I think it would be
Hardly any
wise
profit.
to add to those positions because again,
Yeah, BNED, yeah, boned.
Share gainer within QSR, and they're going to remain so for the foreseeable future. In terms of Domino's, I just think the bar is very low in terms of expectations. Consensus is 0.
Boned has been climbing. I think that's also from it.
And so I think they've done enough to hurdle those very low expectations. And in the medium term, it does sound like management's ready to embrace third-party delivery, which should be at least a low single-digit incremental comp driver as we look out to 2024.
What was that ripped from?
I think the top line's okay. I think the margin tailwinds are there.
All right, well, I should
Rejected
know
that
McDonald's
heavy.
reports earnings next Thursday, so we'll pay close attention to that. Nick Setyan, Wedbush Securities, thanks so much for breaking down those picks for us.
Thanks for having me.
Coming up next, the disruptors. Kevin Green will be taking a look at ServiceNow, jumping to new 52-week highs following a few price target increases. He'll give us all the details and an example trade next on Trading 360.
BBIG is down 3%. See if we bounce on the same trend. Lift hanging out up there, 5.4. Holding strong. Runs up 4 still. 55 million on Barnes & Noble. Well, they like closed down a bunch of stores, didn't they? I feel like they're going out of business too. Big breakout there on Confluent. I don't see any news. $24.94 options begin trading. Kind of made that cut. It really made a handle. Kind of went for it. Maybe pre-earnings run up here. Big move, 8%.
So that's why they are actually fairly bullish when it comes to ServiceNow. We also see B of A raising their price target to $700, up from $600, and they keep their buy rating on the shares. They also have had a call with dozens of their partners here, and they do believe that there's going to be healthy Q2 and Q3 activity for the remainder of this year when it comes to ServiceNow and its products that they offer. They also believe that the current revenue performance obligation growth of 24% year over year is going to continue here, and that's also going to be a major catalyst for a move to the upside, and they could potentially capture three large market opportunities, which includes IT service management, IT operation management, as well as custom apps. And then last but not least, we have TD Cowen. They moved up their price target to $650 from $530. They keep their outperform rating on the shares as well. Once again, they have a survey that does show second half growth increasing here in the near term. So that's what we are seeing when it comes to ServiceNow. We also have to just kind of keep in mind the last quarter, they did kind of call out the elongated sales cycle, which could impact obviously those current obligation numbers, which is really just that backlog number that a lot of analysts and traders like to see as far as the health and growth for this company in the not only the near term but the long term here. So that's what we are seeing from a lot of these analysts right now. We are seeing the shares move up marginally early in the session here today. Let's see if it's going to be able to continue.
All right, yeah, shares up about 2.3% right now, almost up 60% year to date, but these analysts are pretty bullish. 700, the highest that I see on the street from B of A. So, Kevin, given all of that, what would your example trade for ServiceNow be?
Yeah, well, we see that they actually will be reporting earnings late next week. And so an example trade to be able to capitalize on not only the bullish comments from the analysts, but also trying to capture maybe a little bit of the earnings move. A trader could actually look at buying a bull call spread here, buying the July 28th, 610 and selling the 620 calls for a debit of $4.25. Max loss in this trade would be $425. The max gain would be $575. Break even at $614.25. And Caroline, really the setup here is not only the bullish comment, knowing that we're going into earnings, but if you look at a 3-year weekly chart, you do actually see resistance at the $621 level, which was resistance from February of 2022. So that's also a reason to target these strikes. In the event that we may see some resistance at that level, this spread would theoretically still be in the money. And if it does move above that price target, you could also look at taking the trade-off early for a profit. It may not be for the max gain, but that's also another avenue that traders can take when putting on spreads or any type of options trade for that matter.
All right, we'll be looking out for those earnings next week. Kevin Green, thanks so much. Coming up next, it's time for our 360 round, and we'll be previewing Las Vegas Sands ahead of earnings after the close. We'll see where casinos are on their COVID comebacks next on Trading 360.
TTOO is rallying there, 14.5%. I think Beyond might be a good, getting pretty good again too. Cleaning some stuff out of my portfolio, make some room for some Beyond. I'm back down to VWAP. BBBYQ hanging out at the highs, 3949. Groupon kind of sold off there.
Well, we actually avoid Las Vegas Sands right now. We don't own the stock in either our Advisor Shares Hotel ETF or Advisor Shares Vice ETF. I think a lot of investors might not even be aware that Las Vegas Sands sold off the Venetian and the Palazzo last year, and now it's a pure play on Macau and Singapore. The Chinese economy came in a little bit disappointing in the past quarter, and I got concerns with volatility and risk with Las Vegas Sands, so it's an avoid for us.
Okay, so avoiding Las Vegas Sands ahead of earnings. Dan Wasilek, I want to get your expectations from the actual report. You know, back in April, LVS said that it's in the midst of this robust recovery in terms of performance in Macau. But since then, we've seen some economic data out of China come in pretty sluggish. Could that impact Macau, or is it just going to be continued robust recovery in terms of what we're seeing there?
So Las Vegas Sands is fairly valued for us right here. Our fair value estimate is $57 per share. Yeah, I mean, I guess if you want to look at the near term, there has been a recovery in Macau. We think if you kind of look out over the next year, that's going to continue, but there could be some bumps in the road. I mean, these are cyclical names. The shares can be highly volatile, but
Wayfair.
From a longer term perspective, we're extremely constructive on the Asia gaming markets,
doubled
Macau
also.
and Singapore, where Las Vegas Sands is by far and away the leading asset. And the
Upstart,
reason
man.
that
Oh my
investors
gosh.
should be constructive on this market is that supply and demand characteristics are very positive. So for Macau, you have the Chinese population of 1.4 billion people with rising middle income class growth, and you only have 6 operating licenses and 30 casinos. If you compare that with the US, you have about 1,000 commercial and tribal casinos in the US alone. So Las Vegas Sands is well positioned in both Macau and Singapore with the best assets. So any opportunity that you would get on kind of cyclical concerns and kind of a near-term pullback demand related from that, that's really the time that you look at these. But again, right now we think it's fairly valued.
Dan Aarons, I want you to weigh in on the overall market. Are you more bullish on companies that have exposure to, say, Las Vegas or exposure outside of Macau and Singapore?
It's a great question, and we're very bullish on the travel industry overall. Demand is very, very high, and we don't see that lightening up. When you look at the hotel space, they have, flexible pricing, and people seem willing to pay the higher inflationary prices because these places are packed and demand is high. We just really have large positions in Boyd Gaming. That's big in the Las Vegas locals market, regional casinos around the country, and MGM Mirage.
I get like starstruck when stocks just perform so well.
Vice and
No problem.
hotel ETF. So
Makes it me
we like
hard
the
to
space
enter.
Overall, don't mean to be too negative on the Macau and Singapore markets. We just think there's better options if you're going to be invested in the gaming space.
Crazy.
So Dan Wasilek, you say for Las Vegas Sands you have a 3-star
It's like
rated
mesmerized, like looking at fire.
fair value estimate. That implies that maybe it's run about $2 too far at this point. What are your better options in this space? What companies do you rate higher and think have more room to run?
Yeah, so in the U.S. market, we do think that Caesars and Penn Entertainment, which are two regional and, in Caesars' case, Las Vegas exposure names that also are playing the online sports betting and iGaming markets, which is a market that is exploding with more state legalization since a Supreme Court ruling in 2018. I would say that those are less volatile markets. Sentiment-wise, too, you have to worry about geopolitical risk to some degree with Macau exposure, but those would be two names. And yeah, we would also echo Dan's comments that travel is resilient. Travel is a human ingrained desire. We see it time and again with economic cycles. As long as people have the financial means and from a health perspective can travel, they do travel. It's healthy for them to do so. It's something that they seek out, and it's probably been accelerated post-COVID.
So Dan Aarons, travel is resilient. You're certainly bullish on it. But what happens if we do, in fact, see a recession? Then what?
Well, there's always talk of recession. We've been supposedly on the cusp of a recession for the last 2 or 3 years, but I'll echo what I already said, that demand remains very, very high. And we still see strong spending and strong employment. So even if we go into recession, I don't know if it's going to be a typical recession or a textbook recession, because we see that strong demand, strong spending. If we go into some type of deep recession that's extended, which we don't see right now, then things could be different, but we can't deal with too many what ifs that are that far, off on the left.
Dan Wasilek, bringing it back to the casinos, where do they stand in terms of performance pre-pandemic versus post-pandemic? Are they completely back? At what point do they get back if not?
No, they're completely back. They were back last year, and we expect that to continue this year, especially as in Las Vegas markets, we have convention and group travel coming back, which really wasn't even a driver last year. This full recovery has been led by leisure, and in Las Vegas, convention and group is a very important market. So you have both regional casinos in the U.S., Las Vegas casinos, having already fully recovered. We think that continues. It's not our base case. It hasn't been our base case that we'll have a recession. If we do, these are cyclical exposed areas. Hotel revenue per available room in 2001 and 1991, had a slight downturn. But again, COVID could also have offered work flexibility and more desire to travel than before COVID that kind of can maintain more of a lift. So within cyclical exposure, we think that travel's really attractive and enduring.
All right, we have to leave it there. Dan Wasilek, Senior Equity Analyst at Morningstar, and Dan Aarons, Advisor Shares. Thank you both so much. I hope I got your last names right because I said them multiple times throughout the show. That's going to do it for Trading 360. I'm Caroline Woods. Nicole will be back at 2 p.m. Eastern for the watch list. But stay tuned because Fast Market is next.
Construction in Manhattan. Well, barbecues off the breakout, but just very, very subdued. Hasn't fully broken out because it does seem like it wants making that 40 cent the big breakout area. It needs to break out though because this RSI divergences continue to build. We need to get this RSI higher. Nice breakout there on RXT. Joby's down 14.5. Kind of move with this on Party City. 200%. Redfin's down 6. Iron Net down 5. Egg is down 2. GME is flat.
Impact on the overall equity market. It just seems like there's no news out there to throw a wrench into this rally.
Goldman stock is up $6.
Yeah.
Why is that? On
Jimmy's
earnings per
boring.
share that missed. Fixed income, commodities,
It's
currencies
fixed.
down 26%.
With news, you just get
flat.
big gap ups like
Investment
earnings.
banking down 20%.
And then that's
Why
it.
is it possibly up? Why? Because they cleared the decks.
Almost cleared the decks.
Right.
They still have that one investment. They've got $650 million left on that one that they bought just a year and a half ago.
Barbecue coming down a little bit. See if we get a VWAP test here.
Yeah. So if investment banking and IPOs and M&A start to pick up, which the rumors are, the mumbles are that it is, they're the leader in all that. And that's the part of the business that's been dormant. So I think there's a little bit
could be making a big inverse head and shoulders here.
bottoming feeling in Goldman. I think that's why the stock, and
That's what it's looking
we
like.
talked about that this morning. The numbers don't look great, but people still think the future is pretty bright for Goldman.
Yeah.
But it really has just been
I think,
chopping.
Just trying to clean house on an earnings event like that Goldman report kind of sets the tone for the overall equity market at this point, where even bad results aren't going to hurt this market at this point. It's like Teflon right now, Kevin, I think. And one of the stocks leading the market to the upside so far this year, part of the Elite 8 is Microsoft. Let's bring in Jenny Horn, markets correspondent here on the network, to expand on this story we've been covering a bit lately, Jenny. And it's another round of price target hikes here from Microsoft.
Jenna, you look like a cupcake.
Analyst activity regarding Microsoft, and I thought you were going to say leading to the upside today, because actually we are not seeing that today. We're seeing shares slightly lower to pretty much unchanged now on the session. But to your point, actually shares are up about 50% this year. It's been a strong performer and one of the forerunners of the AI push. But regarding their AI push, we did get some news that they unveiled some pricing for their AI subscriptions.
High of the day there on SPY.
Shares did close at a record high
Just
in yesterday's
waked up
session
there.
after they revealed this $30 fee for their monthly Copilot offering, which adds its AI capabilities to Microsoft 365. The company also did share a significant update to its Bing AI chatbot and said it would offer Meta Platform's new large language model to its Azure customers. The announcements did lead to a
volume there
handful of
too.
these price target
The bank earnings at
adjustments as
12.
The company is seen solidifying its dominance really in the latest technology revolution that has consumed the overall market this year. We did see JP Morgan reaffirm their extremely bullish outlier viewpoint on generative AI and walk away incrementally positive on Microsoft's category leadership into all things AI, as they believe
It's jumping around here. I don't know what's going on.
velocity in this market. pretty positive. They have an overweight rating and a $350 price target.
A lot of volume just came in too.
Copilot does represent some significant premium to Microsoft 365 and came in higher than what the street had been expecting. They also do view this as a sign of the company's confidence in its product as well as its overall demand. We also saw Wells Fargo today raise its price target to $400 a share from $380. Highest price target among street analysts right now is $425. That's out of Barclays. Also raised from $336. That's some pretty significant upside. Bank of America also raised their price target to $405 from $340, which would reflect about 13% upside from our closing price on Tuesday. They do still expect this AI workload to contribute to this solid Azure strength, forecasting about 1% upside now to their fiscal fourth quarter revenue estimates. This analyst called Copilot's ability to sort through business data a critical differentiator to some current AI products that are available. So while we do know this name has performed well, it hasn't gotten the same degree of love as, say, like NVIDIA, which is up astronomical on a year-to-date basis. But as far as the analyst remarks go regarding Copilot and some of this new pricing unveilment, really, really optimistic. I mean, $400 a share to $425, well above, obviously, where we're currently trading at $357.
Jenna, your shoulders have ruffles.
The analysts covering this name, the average price target right now, if you take the median, is around $360. So there are still some more pessimistic views. We're just not hearing from those bears in Microsoft, really, given the recent climb.
Jenny, the average plan for Microsoft is anywhere from $12.50 a month.
I was just
per
tweaking
person
out up
to
here.
$57 a month per person. This add-on for AI is $30 per month per person. We've heard all the excitement. We saw the stock go up. But we're not hearing anything of is some people saying, wow, that is too much for what they're going to be giving us. This is, now I know why everyone is so excited about AI, because like sitting in a fine restaurant, the bill just came due, and it's a big one, Jenny.
I know, and I think $30 honestly seems fairly reasonable. I know Adobe's
per month.
I know, but like $30 at that point, if you're invested in AI and you want the top of line technology, I mean, I think you'd pay that. Now, pretty much Netflix is $30 a month at this point. I mean, no, that's an exaggeration, but Adobe is relatively expensive. You pay it on an annual. I always pay it on an annual basis. Prime has raised its cost. I mean, everything's going up. I think, unfortunately, $30 a month doesn't make me bat an eye, at least if you're obviously into the AI space. And I also think that you're paying then for the best product out there if you obviously subscribe to that thinking with Microsoft's huge investment into OpenAI. So I'm not surprised. What I do think will be interesting to see, though, is other companies that follow. I think this is just the first shoe to drop.
I don't know. I don't know why there's some volume that came in. Maybe some news or someone's talking. Some data came out. Stop losses were triggered.
Put this on your parents' bill. Remember, kids
Just
out there,
choppy market, so you're gonna see. It just looked like crazy because the market's been so slow and low volume today. So when you see something move, it's exaggerated too. And it's a technical level. You just hit a yearly high on SPY with that wick.
Blue blazer on Fast Market. You can talk to me about my fashion choice.
Jenny, you know what goes with the blue blazer? Everything. Remember that.
Yeah. All right.
So I'm getting support in the newsroom for that. So
well, they like you better than us. That's why.
For sure.
Did you hear them all clapping?
Easy one. All right. Thanks to Jenny Horn, markets correspondent here on the network, breaking down that.
They're making fun of her dress.
Story today, but stock is off a little bit.
What'd she say?
If we can bring up a chart
what?
Of a 1
You say something about a blue blazer.
Apple, there was just some news reported by Bloomberg that Apple is working on building out tools to be a competitor with OpenAI, so that stock jumped up a little bit on that news. Hey, you throw AI in there and
yeah.
It's not
I'm thinking
surprising.
about kevinhinks.ai.tda. Yeah.
That might work.
Just throw it on there.
It was like Bitcoin when that was up to 65,000. Everybody put Bitcoin on their Twitter handles for maybe a response out of that. But now let's bring in Nick Theodorakos, Financial Risk Management Director at TD Ameritrade, to join us. Hey, Nick, I mentioned this. I tweeted it out earlier. You've got the Dow, NASDAQ, S&P 500, all in overbought territory. If you look on it from a technical basis, the RSIs are above 70 on those levels, but it seems like the FOMO trade right now is what's in control. People that haven't maybe been in the market or maybe been short, they're kind of getting in here. This That's what scares me. That old adage where
PacWest 10.5, man.
Everything seems to be rosy, but there's still risks out there.
It's really tough to know what those risks are. I think that's one of the reasons you're seeing such a pile in here, because the VIX is really low for a reason, right? The VIX curve has flattened for a reason. We've got dollar normalizing, we've got oil and energy prices normalizing. A lot of these commodity prices are continuing to remain low, downtrending. What is the next shoe to drop? I think I sound like a broken record. There's corporate real estate thing looming out there. There's sort of, inflation
that's crazy.
not come down as much as expected. How much higher are rates really going to go? Like those stories are.
Yeah, the shares were gone on barbecue yesterday.
Like, what's the next shoe to drop? Maybe there's some massive disruption.
We only had an update till 10 a.m. Right, it stopped yesterday.
If, one of the bots takes over something and destroys something, and whatever, and I'm going to my Terminator days or something. But if something bad happens in that space, it could easily be a derailer. But those aren't things that anyone's projecting, which is why you're seeing this sort of state of real calm. And then you get this situation where, interest rates have sort of enticed people away from equities for a while, and now you get this really quick flood back in. I think you're seeing, institutional investors, I think, did lead the way on this a bit, and now you're seeing retail pile in. It's a game of leapfrog a little bit. It's a bit concerning from a risk standpoint to see how quickly we've popped back without real changes in fundamentals. I will say that while we've had a really, impressive earnings beat, the bar has been so low. I think people are a little bit short-sighted in what those beats really mean. Is it sustainable? I don't know. Mm-hmm. Is it, are we really beating expectations? Not really, right? Expectations were lowered significantly in many, many industries and companies. So, yeah, there's beats, but, it's largely cost-cutting. It's not really sort of this drive from an organic growth and innovation perspective. You're seeing like, well, we beat this lower bar by a little bit, or we beat expectations even though it was worse. That's not sustainable, right? I think
Top is up 10%.
Just from a market perspective.
And ripping.
As to what's actually the big vol catalyst, there's nothing
Rally,
on
you
the
in top?
horizon right now that's out there. We don't have the debt ceiling. We don't have the stuff we've been talking about. It's all quiet, and I think that's just leading to this. And it's probably a good point to be somewhat defensive in your positioning.
I think today's an important day here.
The melt up.
I think today's an important day. Why? Because now we're getting to high cap tech. Yeah. We're moving away from banks. We're moving away from airlines, which we pretty much knew travel was strong. We knew banks, because of net interest margin, were going to do well. But now you've got a potential tone change. And the question is that I think is, do these Magnificent Seven or Elite Eight, whatever you want to call them, do they move as a sector? Mm-hmm. Right? If one of these stocks misses or disappoints, does the whole sector start to weaken? And that will bring stocks lower.
But this is a really important growth story, right? You say AI, just like when you said Bitcoin a few years ago, right? When you got into those conversations, you added, for Apple to add 2% today on staying AI, think about how big that stock is. The market cap move there is massive. And they pop like that just on saying it out loud. That is the potential risk. It's getting ahead of itself. We don't know what the implications are, but these growth companies are getting the benefit of having, the ability to tack that on, and then everybody buys in.
It was crypto, now it's AI. In between there, it was streaming. Yeah. These don't end well.
Well, yeah, historically they don't, but they're calling this the next phase of the internet. That the internet was pretty popular, still is around. So you wonder about that. But
how's that AOL stock doing?
Oh boy, bringing back days of me in the pit over there. Let's bring up that Apple chart, that 1 minute Apple chart, because the stock continues to move a little bit higher. The report is Apple's quietly working on artificial intelligence tools that could challenge OpenAI, but the company's yet to give a divisive and clear strategy for that. Foundation known as Ajax is what they're coming out with, according to Bloomberg. So this is definitely one to watch. It's putting a little bit of bid into all the major indices, except for the Russell, because Apple is a part of the Dow, the NASDAQ 100, and the S&P 500. So we'll continue to watch this story develop as maybe we get some more clarity. But Kevin, Nick mentioned earnings season's doing well so far, about an 80% beat rate on the handful of names that we've had. Is that going to be, the next driver? Because as I mentioned earlier, the FOMO trade is real. I mean, you're seeing it in names that are meme stocks still now. I mean, the FOMO is out of hand at this point. But that's not to say that this market's going to turn around, or it should.
No, it's overbought across the board. The question is, a lot of people's targets for the S&P for the year are still 4,400. Right. And so what does that say? If they're not really budging off the 4,400 level. And so I think a lot of people are getting very hesitant up here. And sometimes it takes, a bomb to move the market. Sometimes it takes a feather to move the markets. And we're getting up to levels here where any little thing could move this market big now.
Yeah, I think that's a great point, because as we extend these gains, we get above moving averages where everything looks overbought on a chart. Nick, that's where that feather could tip this over. But when you look at guidance moving forward, you mentioned the lower bar set. Well, that's the MO for the market every single quarter. Mid-quarter, you start lowering expectations, and then it's an easy beat. Historically, that's what takes place. But is guidance the key here moving forward to kind of extend this rally?
I believe so, and I think, again, I go back to is it cost savings that companies are beating on, or is it actual organic growth? And we know the consumer is a little bit nervous here. Credit is really far extended. Corporate bankruptcies are on the uptick. We did get some good inflation data out of England today. That's pretty solid, right? So you're starting to see it cool, but if the consumer is really worried about it, there is this lagging effect of this whole interest rate, complex that we just don't know yet. If the consumer starts to cool, and these companies are only beating really low expectations from a cost-cutting perspective, that sounds like recessionary concerns, right? If customers pull back, or if consumers pull back, you start to get back into that, like, you can only cut costs so far without having that organic growth to really fuel the long term, and I think that's the unknown still.
Good direction out of the UK CPI, still 7.9% year over year.
Very high, but better than expected.
Yeah, better than expected.
That kind of set the tone.
I think that's why the dollar's higher.
Yeah, the dollar's a little bit higher. Yields continue to move a little bit lower. We saw 30-year mortgage rate dip back below 7% on this slide. I think 10-year yields down about nearly 30 basis points over the last week or so, or week and a half.
Mortgage apps jumping on that. How about refis up 7%?
Yeah.
Who is refinancing?
Well, 6.9% is better than 7.05, I guess.
Every downtick now is a refi. It was very quiet in that market for a long time, but now it's like, basis points are worth it now.
That goes back to Kevin's, analysis here, is the fact that there's a queue forming.
Right.
Yeah.
People want to move, and people aren't moving. So there's a queue built up there. So we'll continue to watch the housing market. Those starts came in down 8%, but that was expected.
Jim's coming down a little bit.
Jump that was revised down a little bit in May. As far as data goes. All right, guys, let's take a quick break. We got big names to talk about. We're going to talk Tesla when we come back. The EV makers rallied about 140% so far this year into their quarterly results. Coming right back.
Happy hump day to you too, Daniel. Astra's up 10%. That's kind of interesting. Maybe it's catching up to Rocket Lab. It could break 40 today. It's looking nice. Nice bull flag. Seems like it wants to. Puts in the near future? Like on the market? I've been just day trading the market for the most part, so nothing long term. But I've puts on I've long term puts on Rivian, Lucid, Joby, Fisker, and First Solar. So a lot of the EV and just green energy stuff. Those are all over 100 days till expiration, but they're all way out of the money. They're like, most of them are bankruptcy puts, so hoping they go to zero. AMC suspended? They finally get their court news? No, it's still trading. A lot of volume though. SPY's coming down here. Mullen, I think Mullen's also going to be going bankrupt. It's already so cheap though. It's not a whole lot of reason to go short on this. It could have pumps before then though. SPY bounced on VWAP there. Not sure if it's going to decide a direction today. If it doesn't, I think the next direction will probably be down for some pullback, because we've been in a steep uptrend. If it starts to slow down here, probably start to come down a bit. So you have longer time frame. You've got a shoulders, of course, it formed on the way up, and then today flattens out. You've got your head. So looking for another shoulder under 450. What is that? 454, 86. May or may not see that today.
Surprising there, but Nick, you got an example trade. Option market's pricing in about a plus or minus $20 move in the shares.
Yeah, it's about a $20, $22 move. It's 120-ish vol on the 2-day options. There's some interesting stuff there, but I went out a little bit further, playing this longer-term trend. So we're 44 days out, looking at the September 1st weekly options, and an upside unbalanced call butterflies. So buying the 300 calls, selling 2 of the 330 calls.
SPY's coming down a little more now.
One of the 350 calls.
See if it bounces off the low of the day or
wide long vertical.
The trend starts to decide.
Is a very expensive, trade, but then you're capping that off with a $20 wide protection against that 330 extra short put. So $30 long call spread, $20 short call spread. It's about a $6.40 debit right now. So it's a fairly expensive trade. I tend to bring a lot of sort of cheap earnings plays, but I think this is
not today.
Not today, sir. Not today.
Not today.
This is it's a wide spread, right? But what you're really looking for here is an expansion in that spread, and you're not going to go.
I'm actually green on this put.
$30 on earnings or $40 on earnings, pin that strike and have this thing expand to its full value. But if they do get a continued upside move here, you could take one of these off for a profit relatively quickly, maybe more quickly than a normal butterfly, just because of the earnings today. And then if not, time's on your side, right? You're just looking for this to grind higher. And a lot of times with Tesla, even if they are down on earnings, you're going to say, okay, well, I'm going to realize my $640 and no, they oftentimes have an earnings reaction, and then they'll kind of regain.
Oh, you average into your puts
based on
Now you're starting to get
commentary. So
unbalanced with it though,
longer term,
Cameron,
it's
because
a
you're already
24-day
heavy on the put
play,
side.
with the hopes that that trend continues. No risk
Day
to the
trading.
upside,
Yeah,
because
it's in a market like
unbalanced.
this.
If it does explode through to
The
upside,
last couple
there's no
months,
risk there, but your profit
like
does
few
go
months
down,
really,
use that in betting
most
costs,
of
but
this
the
year,
risk to the downside, just what you pay for about
we've
640.
just been in this crazy
let's
rally,
break
so
this one down again.
day trading
September
hasn't
1st,
necessarily been
weekly series,
needed.
44 days till expiration. Buying
Risk
one of
on
the
has
300
really
calls,
worked well,
selling two of the
specifically in the
330
last like
calls,
couple
buying
months.
one of the 350 calls. 640 debit. There's
But
your
before
risk,
that, you know,
$640
since the
for
COVID
spread
highs,
with that break even of 306.
just the whole
40
bear
to the
market,
upside here, Kev.
any rally was
Reward set up
very
pretty
short-lived,
nice.
so
Even
you
above
just had to be in and
350,
out
you're
so
still
much.
gonna profit about
You get wiped your
$360
profits
per
very
spread,
quick.
because that the short call vertical that's embedded in there comes into play. But the apex of profitability, right where you short that 330 call.
44 days you have this as well. And
Agreed, Trace. Yeah, we can hold above here. That's good. I'll hold these shares.
It takes you to 315 if it's the upside, and then now you're right in the sweet spot of this spread. So yeah, I like the fact that it's 44 days. I like the fact
SPY's
that
back up to
Nick
VWAP.
bought a big boy spread today. This is, I mean, it's the $30.
Another little inverse cup here.
That you have on. So yeah, it's a nice big number. But
Didn't fully make it down here, but this is really where all the liquidity was, so could count it there probably.
Up there, especially around earnings.
Yeah, you only need about an $11 move to the upside.
Little inverse handle
that
here.
One standard deviation range the market's pricing in. And with butterflies like that, you've kind of got to wait till expiration for those things to really start to expand.
Yeah, we say that they pay you late.
Yeah, they do pay you late. But
Rip into
at
open.
the same time, you do have 44 days, so a month and a half in that trade. Good look at a call butterfly to the upside. In Tesla, if that momentum continues, may work out. All right, thanks to Nick for joining us today. He's a Financial Risk Management Director at TD Ameritrade. Coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for a discussion.
Stop looking at me, Schwan.
Game, with earnings after the close. That's Netflix. The leader
Netflix after the close, Tesla. So market's going to be volatile after the close probably. SPY itself. Barbecue coming down a little bit. I was not expecting such a mellow breakout. Options video. Call stocks go up. I mean, I've got some strategy videos if you look on my channel. Got different videos. Everything's a repeat of what's already on YouTube of someone that's spent a lot more time and focus delivering great explanations of stuff. It can all be found. But yeah, if you look at my strategies playlist, I think I go over some option strategies in there. Then my wheel strategy, or my wheel playlist, you can see me trading basically the wheel strategy with options over the course of, I don't know, months with a smaller account. Which I'm doing again. But I'm more emphasis just on the cash secured put side than the covered call side. And my strategy has changed somewhat since I've done that playlist. My risk management's changed quite a bit. Buy's coming down more. Workhorse up 14%. Top. Rally, are you in top? 20% on it. 923 I have as a resistance. Don't know why. Oh, support back there. 923, 937, 990. Highs coming down. Dude, my puts aren't going up. What? This put was actually up. Now it's back down. Peculiar. All right, I closed out of that daily put. I was up 24% on it. Oh, there we go. Now this one's showing them up 37%. This was my 451 YOLO. I'll have the futures open. Given that this contract was only $5, I think I'll maybe try and hold for more gains on that one. Oh, there's the inverted cup. I closed out of the futures. A little late on that exit. Wasn't sure if I wanted to close it or just hold it. Chappy, they wheel for you. There's an ETF for everything. McDonald's pattern, that's true. About to experience MOAS.
Know how much has this boosted revenue? How much has this, cut down on the sharing of passwords? Another thing is this new ad-supported tier. How well is that doing for Netflix? Because they've got it basically a much cheaper. I'm not sure if it's free or cheap, but it's you get served by ads, and that's how you pay for the service. If that's doing well, I wouldn't be surprised if Microsoft gets a boost. They're the sole provider of that service to Netflix. And then finally, you got the strikes going on, which
VIG down 5 now.
It could be a positive for Netflix because they're going to be
right at that trend.
Obviously, a lot less when it comes to content creation if they're unable to pay any of those services because of the strike. So costs will go down, but then you've got delays on some of their big hits like Stranger Things that people are waiting for. So pros and cons there, but I know that they're going to be licensing additional content from HBO. One show in particular that I saw that they're going to get was Band of Brothers. If you guys haven't seen it, a big World War II guy. It's a fantastic series. You can check it out on Netflix now. But just overall, I think this is going to be a lot deeper.
25% on top.
Signed up. The earnings call is going to be a lot more in depth than that. But what we have is that those numbers are going to be a little bit soft and not supportive of a $480 stock price.
Landon, very quietly yesterday, Evercore upgraded Pinterest. And what the reason they upgraded them was they said that ad spending is starting to tick back up again. And it looks good for a lot of these names. Now, that's just one aspect of Netflix. But that could be a really good sign for Netflix. But it could be a good sign for a lot of these companies that depend on ad spend for generating their revenue. Now, here's my question. Of these three things, then you just went over all three of them. It's the ad-supported revenue, it's the password sharing, and it's the strike, frankly. Which one is the most important, in your opinion, or your data? Which one do you think is the most important for their earnings call?
I think for sure it's ad-supported content because the other two are temporary. I mean, the password crackdown's temporary. The strike is temporary. That's not going to be here a year from now, but the ad-supported tier could be. And if it shows that they can increase revenue and gain a whole new customer base that are much more price sensitive, that's going to be very bullish for the company, obviously. Now, to your point, when it comes to ad sharing, I will say that there's going to be a lot of companies that are going to be impacted by this report. Microsoft won for Netflix, but then also just the entire, I guess, world of it. If ad-supported, if their ad-supported subscription tier does really well, I would also be very bullish on TTD, the trade desk. I think that that's the company that we're very bullish on at Folio for a lot of reasons. But this could be another proof point for them, even though they're not the customer, they're not the service provider, for Netflix. Microsoft is, but it's still kind of a proof point for the concept.
Yeah, and they just came out today. Netflix says basic plan, that $9.99 one, no longer available for new or rejoining members. I know a lot of people cancel a subscription, go back on a specific plan, but that's gone now. Ad tier is $7 a month, standard $15.50, and then premium nearly $20 here. So maybe that is a bonus for the revenue if they don't offer that anymore to new or rejoining members. But Landon, when you look at this, is this something where Netflix is a leader? They've got the most subscribers, over 230 million at this point, where these other companies that are losing money hand over fist in the streaming space go back to just more licensing. You mentioned Band of Brothers, amazing. I watched watched it when it came out, but is that what they maybe should be relying on, that, hey, we've got this other streaming thing where we can sell our content and license it to them, where that maybe gives them Netflix an even better edge?
Right. So I think that, one of the things that Netflix has kind of discovered over the last few years is, the race for content. I mean, we saw Disney fall behind tremendously in the race for new content, and it's very, very expensive. And now I think they're all starting to get a picture into the headaches that can be caused by this content. Not only is it very expensive, but all of a sudden you've got the potential for strikes and slowing things down. And if you're reliant on that new content, the new season coming out, then you're very susceptible to that. So I think it's going to potentially change the model where they're going to be licensing a lot more than creating. I think, if it's me, it's just so many headaches around creating. Why not just license? But somebody's got to create it out there. So that could be an interesting play to see who does that. But yeah, Netflix got into that game a few years ago and really did well in it. But that's always been a focus of expenses, and people are, investors are very concerned about how much they're spending. So I think that I think the strike is going to be kind of a relief on the expense side, because they can't spend money there. I don't know if they're going to lose a lot of customers. I don't think so, because the Stranger Things season is postponed, or some of their other original series are postponed. I don't think they're going to lose customers there. They're doing a good job of licensing. So it'll be interesting to see how that plays out. But again, that's temporary. The password thing is temporary. I think the focus for investors, at least for me, is how is the ad-supported tier doing with customers? Are they resonating with that? Are they signing up? Are they sticking on? And how much money is Netflix making per user on that plan versus some of the other plans? Because maybe they're more profitable with the ads that are being served. I want to hear that.
Yeah, revenue per user is supposed to increase more than 5%. But Landon, real quick, do you have an earnings score on this one going in?
Yeah, we're negative 37, and with the stock running as much as it has been, I think we're a little bit more confident in that than we would have been.
All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of Folio, breaking down the data for us. Kev, lots to go over here. Tricky one, because expectations are really elevated, and as you mentioned, anything that goes wrong could have a negative or a positive impact.
Yeah, I have no idea where the stock is going. Zero. No, they could put out great numbers across the board, and the stock could go down because of how far it's run. I have no idea, Tom. So much like Carvana yesterday, right?
Oh, boy. Carvana.
But remember, the trade we put on was the 45.48. It's in the money on that. So when you play for movement like that, so Tom, I think that this is a massive tone-changing potential for the overall market in general. So what I want to do, this is going to be a big testing point for these other stocks that are coming out. So what I did, long iron condor, Tom, I went out, though, all the way till July 28th. So I went out a little further. But I bought the 510, 520 call vertical. Yeah, it's long. long iron condor, 510, 520 call vertical, but the 450, 440 put vertical. $10 wide, spending about $550. It's not cheap, but you remember, if you get a move in either direction, like you did in Carvana, I think movement here until this market tells you different. You got to play. You got to play for movement if you want, right? If you don't want to, then this is not the play for you.
Right.
But this gives you a chance to basically almost double your money. The risk is $550, but you've got, like I said, a week and a half. You can make $450, but this gives you a chance to not have to pick which way it goes, Tom. It's pretty flat in terms of delta. It's about a 1 delta short, so it's a little skewed, but I don't know, Tom. And when I don't know, I want to play for both sides.
Yeah.
If I'm going to play, I want to play for a move in either direction.
Yeah, and this one definitely takes advantage of that. Let's break it down. July 28th, weekly series. So it's a 9-day sell expiration, so you get that extra week. It's not a pure earnings play here. Buying the 510 call, selling the 520 call, buying the 450 put, selling the 440 put, 550 debit, there's your risk, $550 per spread. With break evens where you want to move outside of 444.50 on the downside, 515.50 on the upside for your break evens. Anything in between there over the next 9 days is unprofitable. Your potential win on this one is outside of those 520 strike or the 440 where you can profit $450 per spread. Option market, Kev, priced in over a $40 move either way in the shares, and we've seen bigger than 1 or 2 standard deviation moves in this stock post earnings.
I still have emotional scars from the NVIDIA double calendar that we put on last quarter, that it went just blew right past it.
Yeah.
We had one that put us on. Remember, a calendar spread, if it moves way through your strike, you're at risk of losing what you paid for that. This, you don't care how far it goes.
Right. Yeah, you definitely need that move. Expectations pretty high so far in Netflix, but a good look at a long iron condor playing for a move over the next week and a half. All right, let's take a quick break. When we come back, we're going to talk another earnings stock, and that's IBM, Big Blue, underperforming the overall market. They report earnings after the close. This one, Kevin, stagnant for years.
Yeah.
I pedal trigger Moz? Okay. I'd wait for probably VWAP retrace first. Somewhere around there. Coin's probably feeling the market sell off a bit, huh?
.6% level, but we'll hear from them in the beginning of August. We've got the Fed next week, as I mentioned, the ECB next week as well on Thursday after the FOMC on Wednesday. But ahead of that, keep an eye on the Japan CPI number. The yen's been rallying a bit here. That had been weighing on the dollar, a little bit of a reversal there. Hong Kong CPI as well as UK retail sales. So still some data due out in between now and Friday to watch in terms of currencies, the US dollar, and the relationship it shares with the products you're looking at on the screen there.
Yeah, watch earnings, Benny, not that Japanese yen. That's going to be moving the markets there. All right, thanks to Ben Lichtenstein, host of the Future Show, breaking down markets. But now let's bring in Kevin Green, senior markets correspondent. We're talking IBM, Kevin, and this is something that Kevin Hinks and I, know from our days down on the trading floor. This was the leader in tech for years, but this thing's been dead in the water for about 13, 14 years. We're at the same levels. Any expectations going into these earnings?
Once the leaders in the industry start to fall off here a little bit, so we kind of have to keep that in context, especially when we're talking about AI, because there's a lot that's going on right now, but it does not mean that the person or the company that is leading the market right now is going to be the leader in the next 5 to 10 years. But we have IBM. We actually have an implied move for this stock at around 3.6%. The market is looking at revenue coming in at $15.58 billion. That's going to be a slight increase on a year-over-year basis. But when you are actually looking at the earnings per share estimate from FactSet, right now it's sitting at around $2.01. That's looking like around a 13% drop year-over-year. So revenue potentially expanding, but earnings, or that bottom line number, continuing to contract. And they've had some issues, obviously, when it comes to scaling as well as expenses. And last quarter, we actually heard some of the expense management initiatives that they're going to try to implement here in the near term, which also includes potentially replacing around 8,000 workers and trying to automate those jobs with AI. So we're going to get an update here today to see what the progress is for that particular initiative. We also want to get some updates when it comes to some of the product offerings, like they announced at their Think conference that they are launching Watson X, which is going to be another AI-powered platform here. It's going to offer several different areas to be able to focus on, as well as data management, trying to be able to provide succinct answers, as well as some other features for this particular platform. And the one that I'm actually really looking forward to is the GPU as a service. Now, this is something that is going to be a highlight for a lot of cloud service providers, being able to provide the GPUs or the infrastructure necessary for companies to be able to train these large language models or these AI models, which requires a lot of resources. So that could be something that could be a revenue generator for them here in the near term. So that's what we are looking at when it comes to the earnings announcement. Once again, you kind of talked about the stock performance has not been great, but it's also low beta. So that's also an area where somebody may find it to be appropriate for their portfolio if they're trying to have low beta stocks that have some exposure to technology.
Yeah, nearly a 5% dividend yield also on this one going into this report. They got to do something. AI, they're working on it. So maybe if they say it enough times in their conference call, that'll be a bonus. All right, thanks to Kevin Green, senior markets correspondent here, breaking down IBM for us. Kev, your thoughts real quick here on Big Blue.
I think they've made the decision not to compete with really Amazon and Microsoft in terms of public cloud.
Yeah.
They're going with Red Hat, and they're going a different direction and trying to carve out their little niche. I think that's the key to this company. Yeah, you can't argue with the dividend yield if they pay it. You can't argue that this company is higher over the last 20 years, but it also got up to $206, and now it's $135.
Yeah.
So I put out a 20-year chart. If you look at it, it's higher, but not great.
Yeah.
So all things considered, like I said, I think the key to the earnings is Red Hat and what they're doing with that private and public cloud, that kind of in the middle there.
Yeah, they did announce at the end of June they acquired software company Aptio for $4.6 billion to kind of expand their cloud-based offerings at this point. So we'll have to hybrid cloud offerings at this point, and their consulting. We'll have to look at clarity on that. But I looked at a strategy here, Kev, because the stock is down, 3.7% so far this year. Looked at a call diagonal in here to take advantage of the higher implied volatility in the near term. July 21st monthly cycle, about a 65% aggregate implied volatility. And then out in August, 30 days from expiration, it's down to about 26. So you've got the big divergence. So we looked at buying the August 18th 135 strike call, selling the July 21st monthlies, the 141 calls. You're paying roughly about a $2.90 debit, Kev. That's your risk on a $6 wide call diagonal. So anything above that break even, which is about or near 134, is profitability on this one, and it takes advantage of that divergence, Kevin, in implied vol.
And remember, the difference between August 18th and July 21st is about a month. It's 4 weeks, which will give you more opportunities to chip away at that net debit and therefore chip away at the break even on this spread. So you do have some time. You got nice data coming out the rest of this week, but this is a bullish play. It's about 31 deltas.
Yeah, and it's about that one standard deviation move to the upside, that where that 141 strike is at this point. Kevin, and you mentioned that as we get closer to July 21st expiration this Friday in just 2 days, you'll have that ability to roll or adjust that short call, creating credits, which would reduce your break even, increase potential profitability if the market's open and liquidity is provided. So you do have some opportunities for trade management on this one. Kev, final thoughts. We've got big earnings coming up today. This could be a pivotal afternoon after the close.
This afternoon's a tone changer, I think, for the market. Potential tone changer. And here's my question. Do the 7 stocks that have led this market, or 8, whatever you want to call it, do they move as a sector? If one's weak or 2 weak, are all the rest weak? Right. And that's why you got to watch Netflix and Tesla. It's like a new chapter in this earnings season.
Yeah, and going back to that example trade that we did in IBM, that bullish call diagonal, 290 debit, that's your risk on that particular position. But good outlook for today's show on those earnings after the close. It's going to be highly watched. And that's going to do it for Kevin and I today here on Fast Market. But stick around. Next Gen Investing is coming up.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Oh, yeah, I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange, bringing you real-time market coverage and access to the biggest newsmakers on Wall Street. Don't miss Trading 360 and the Watch List live from the New York Stock Exchange.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our Active Trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, each day of this week, we've seen pretty strong markets really across the board here. NASDAQ starting to slip in real time, but we also have some pretty major catalysts today after the closing bell, those being Tesla as well as Netflix's earnings. So while I do think things are more muted compared to some of the upside activity we've seen in the last two sessions, still another green day here.
It really is, and you know, a lot of the score will be settled this afternoon in terms of how today ultimately shapes up. This is it. This is what kicks things off. Tesla, Netflix, they really set the tone for what the big part of earnings season is. I know we get like the appetizers in the big banks. They're interesting, they're first, but the real movers are the Teslas of the world, the Apples of the world, the Netflixes of the world. So I'm excited.
I'm excited as well, and at least we already have Tesla second quarter deliveries, but Netflix I feel like will be the interesting one given so many of these structural changes they've really made to their business. But as always on this show here, we'll kick things off with our upvote and downvote segment. Following that, we will chart and trade those upvotes. Our FOMO discussion is a name making a huge move to the upside. That's Carvana after they disclosed their second quarter results earlier than the street had been expecting. And then we will look at the ways that summer travel is keeping Airbnb strong with shares touching new 52-week highs earlier in today's session. And last but not least, we will look at one name that is moving to the downside and pretty significantly here, Toast tumbling after removing its order processing fee from its online channels and clearly not read as a positive among street analysts.
Yeah, looking forward to that conversation with Jeff Pierce. It's a company we've talked about fairly frequently in the last few weeks with George Tillis and on other parts of our show. So we'll see what the latest is and what's behind that move. Looking forward to the Carvana conversation as always, one of our favorites here to discuss on the show, and what an incredible move once again for the car retailer. And then, of course, up vote, down vote, where we're going to kick things off. Not endorsements, not recommendations. This list is on here for a reason. They all have stories behind them. But one of the stories we're going to get to a few names in really threw a wrench in today's trading.
Yeah, I know which name you're talking about. We'll start things off here with Microsoft, which did close at new all-time highs in Tuesday's session. Although we are seeing shares down 1.3%. And we have seen some pretty good news. They did add this Copilot offering, which does offer a $30 fee for its customers. In terms of its AI capabilities, the company did also share a significant update to its Bing AI chatbot that would be offering Meta Platform's new large language model to its Azure customers. Analysts, though, following this update we got yesterday, are turning more bullish on Microsoft, despite today's price activity, of course. Following this news, we did see a handful of these street price target adjustments to the upside from what I could see, as the company only continues to solidify its dominance in the AI space. We see how JP Morgan with an overweight rating, raising its price target to $385 a share from $350, reaffirming their extremely bullish outlier viewpoint on generative AI. And they said they could walk away incrementally positive on Microsoft's category leadership in AI, which they believe has reached escape velocity in this market. Atlantic Equities raised its price target to $400 a share from $330. Bank of America $405 from $340, reflecting nearly 13% upside from where we closed on Tuesday. This name, though, I was actually shocked to see when taking the average among the analysts covering it. Price target is right now around $352 a share. It's slightly $2 below where we're currently trading, but also well below a lot of those price targets I just listed. I mean, $400 on average was the price target I could see that was updated today among several analysts. So these analysts are perhaps optimistic, but that doesn't mean that all analysts are as enthusiastic about Microsoft's 12-month story.
Or some of them are maybe just waiting on the sidelines till either after earnings or right before, as that's on the horizon. Maybe we'll get some updates. But really, really strong year so far for Microsoft. Stock was trading, let's call it, just under 360. There was breaking news that we're going to get to again in just a minute or two. That really impacted this stock about an hour ago. But all of these stories, all this optimism was good for a little bit better than unchanged. The breaking news really changed the stories. The stock's down now 1.3%. Next one on the list, though, is ServiceNow. Talk to me about this one here, Jenny, because this one's still holding on to a relatively okay session thus far.
It is, and actually did touch 52-week highs earlier in the session. And another name that has a ton of analyst news today, Barclays, raising its price target to $646 from $559. Also keeping an overweight rating, saying that the second quarter results for a lot of these software names will not be major catalysts, given that second quarter is the last round of some of these bottoms in terms of comparisons in the past quarters. And they do see now, in terms of going ahead, they see their cloud optimizations visible at full force. However, they said third quarter guidance and implied fourth quarter guidance could be more interesting, as Barclays reseller survey does show a potential uptick for the second half of this year. B of A also raising its price target today to $700 a share, which is obviously significant to where we're currently trading, but kept a buy rating, continues to identify this name as a top pick, which I had to include. Alex, I know you love those buzzwords.
Oh, yeah.
And TD Cowen also with a $650 price target from $530, keeping an outperform rating on shares, saying that their survey checks do show the average 2023 growth outlook saw a nice uptick from 14 to 20%, which suggests that partners see a strong but more back-end loaded year. So a lot of this sentiment is something we've heard with some of these software and tech exposed names, that back half of this year is expected to pick up. Perhaps we've reached a bottom. We will, of course, have to wait and see, but this name does report its second quarter earnings July 26th after the closing bell.
And as the NASDAQ got a little bit wobbly about an hour and a half ago, we also saw this stock lose a lot of its intraday gains. As you mentioned, it did get up to $614 a share, about almost 2.5% higher than where it currently is. So certainly some market weakness in the tech space weighing on an intraday. Doesn't hold back the fact that a lot of positive news catalysts today that were influencing it earlier this morning. All right, let's get to the breaking news story. I know it's not that breaking at this point now. It's been about an hour since this news broke. To me, this doesn't seem like a surprise, but the market's treating it like a major surprise.
Right. I mean, to me, this was only a matter of time. I feel like I was just waiting for this headline to come out, but we are seeing shares of Apple now rising only about 0.5%. But we got this Bloomberg report that the tech giant is quietly working on an AI tool that could challenge OpenAI, while adding that the company has yet to devise a clear strategy for releasing this technology to its consumers. Apple has built its own framework to create large language models, according to people that are familiar with the matter that did report this to Bloomberg. With that foundation, which is known as AJAX, I think it's being pronounced, it's AJAX. Apple has also created a chatbot service that some engineers are calling the Apple GPT. Now, the AI push has become this major effort for Apple in most recent months, with many collaborating on the project, but we haven't really gotten any updates until
Just why I made that handle there, you can see.
Well, this is not making a major splash for Apple shares.
38.2% of retrace too.
Alex, I was talking this name less than an hour ago.
Here we go.
Changed on the session, and now, like we just discussed, now lower, so completely brushing off all of its positive analyst momentum. And it does seem like Microsoft's a little bit concerned because Apple is not a competitor you want to face.
Yeah, I'm going to call it AJAX just because that's how it's spelled, but huge move initially. Obviously, ripple effects across sort of the AI names that were understood to be where they were in the space. And as you said, this welcoming hasn't been so exciting, I think, to the AI world, but I don't think Microsoft's surprised that Apple's working on this, and quite frankly, that probably was the best kept secret. I mean, this again isn't a surprise to me. We have a little bit more details than we probably did before this. We got a name, we got confirmation that these projects are being worked on, but did anybody really think Apple wasn't working on something? To me, that would be kind of ludicrous. So we got a little bit more details. It's out there now. Initial reaction was a huge pop in Apple shares, because bear in mind, Jenny, every time Apple moves $1, it's almost $16 billion in market cap. So if it moves $5, $6, I mean, you're talking about sizable market cap creation. So huge move. It's been an awesome year for Apple. Seems like every year is an awesome year for Apple, at least over the last 10 or so years. That's been the case, but wasn't a lot of staying power intraday. And I think that goes to show that, you know, some of this AI hype still there, still real, but it's not at this fever pitch that it was in, let's call it, January, February, March of this year.
Yeah, and I think that feels like it's coming down a little bit, but I think it's a good thing because there was so much excitement, so much enthusiasm. Names were making monster moves. I think it's almost refreshing to see Apple just with a 0.5% gain, that we're not seeing some crazy upside, because this is still a company that is so massive. Its framework is so much beyond its AI push here, because this is just, Apple's a behemoth, and one of the only names that we've really discussed that's at its all-time highs pretty much. Our last name today, though, is Cinemark, and it wouldn't be a show this week, Alex, if at some point we didn't discuss movie theaters and, of course, the long-awaited release of some of these major titles this weekend. But Cinemark, with some negative news today, although completely brushing off any pessimism here, as we did see JP Morgan downgrade shares to neutral from overweight due to concerns about these Hollywood strikes. They did also establish a December of 2024 price target of $18 a share. That's below its December of 2023 target at around $21. They said their prior upgrade of Cinemark really suggests that shares back in January were largely predicated on an increasing film supply driven by this higher domestic box office. While they do think the industry has demonstrated an ability to run at about $8.5 to $9 billion of gross revenue, they estimate that further improvement will require more wide releases, and did warn of the strike's impact, the basically already shutting down several movies that are slated for the release in the second half of 2024. And absent a resolution, they expect this strike will remain an overhang on Cinemark shares. They also said, and I thought this was interesting, that to limit upside potential regardless of whether the box office does outperform near term, with, of course, Barbie and Oppenheimer releasing this weekend, or even the company posting better than expected results. So they see this strike as a more major catalyst than any near-term benefit to this name, which is pretty interesting. Now, Cinemark has had a pretty nice year. It's up 71%. It's up almost 80% off its 52-week low. Still well off of its high, and it's come down over the last month. It's down about 10% for the month now.
You know, looking back in time, before the pandemic seems like an eternity ago, but these names weren't doing that well. These movie theater names weren't doing that well prior to the pandemic. This wasn't as economical as it had been in years past. They weren't thriving companies. they got threw into this world-changing kind of time where no one went to movies at all for what seems like years. And then we had to see movies, so they came out at home. We say this every time, Jenny, but once you change behavior, it's very difficult to kind of put the toothpaste back in the tube, if you will. And so, we used to drive-in movie theaters. I mean, it's kind of a novelty. I think there is some places, but it's seen as kind of old-fashioned. Like, you do that because it's kind of fun and interesting. Once you can watch them at home, you kind of don't really want to go to the movie theater. I know there's movie buffs who are going to feel differently. It's the same way, that you have, fans of things that are never going to change. But the masses aren't going back to movie theaters. We're just not seeing it in the box office numbers. So, they got to figure something out because they were struggling before, and now behaviors change. So I think that these are companies that are quite interesting to kind of watch unfold, but there's a reason AMC was a meme stock. It's a company that a lot of people bet against. So Cinemark not that far different than a company like AMC. But let's do our best to narrow these down. I don't think it's that difficult today. There's one key story, and there's two companies that are related to the story, so I think it's quite simple.
And two that are a part of the Elite 8 that Tom is calling it. I thought it was the Magnificent 7, which I think I like actually Elite 8 better. So those votes today, those being Microsoft as well as Apple. Two stories that are connected and two names that have been quite solid performers on a year-to-date basis and really over the last decades. We'll be diving more into the technicals on both of these names as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
Spies maybe not done.
said, now we're below that 70 threshold that designates the overbought area. So ideally, the bulls would want to see price hang on above that resistance, but also cross into the overbought area at the same time there. The cross back out of the overbought area is usually regarded as a more bearish type of signal. So that would be something they'd want to avoid here. So looking at our chart a little more closely here, if we mention our +2 standard deviation like I was talking about earlier, that can be a way to gauge where you might find some resistance when something is making new all-time highs. That comes in just above 205, this orange line here. So keep an eye on that level. It will change as price continues to move day by day here, so it's not going to be an exact target based on what I'm seeing right at this moment. But you could keep an eye on that study. When we start getting close to there, maybe consider taking some profits. To the downside, if we don't hold our 194 level, we've got quite a bit of support coalescing right in the same level, around 189 to 190. We've got the start of this gap, that small gap right there that proved supportive a couple times there, even though we did break below it. That would still be an area that I might have in mind. We've also got our trend line, we've got our +1 standard deviation channel, and our 21-day exponential moving average, all coming in around the same level. So there's quite a bit of potential support in that area. I would be taking notice if we were to break below it there. Potentially then that could open the door to the 63-day exponential moving average, coming in around 180, but that's a good bit away at this point.
Right, 180, we are trading right now just below 195 a share. And Rick, this name has been phenomenal to watch, and I think their entry into AI was just a long time coming. I'm not really that surprised, but I guess anytime we get more concrete updates, it does make sense to see shares react, and Microsoft being the clear one that is reacting, at least to the downside. So now I'm trading this name, Alex. I mean, this name pretty much right around its all-time highs. This name's been on a tear, and I can second Rick's sentiment that great for Apple to come out with news right before our show, because all of my percentage changes now are all messed up. But I do know this name is still a clear outperformer, and in terms of its earnings, it is one of the most solid throughout the market coverage that we discussed. We don't have earnings until the first week of August. We do have some time there, but walk us through then a more bullish leading example trade.
Yeah, we're disregarding earnings being on the calendar for this one. There's excitement around AI. There's analyst news. And it's Apple. It's a name that, many maybe have exposure to one way or another, just simply as a passive investment, be it through some sort of broad-based index product, or of course just a simple investment in Apple shares. It's one of the most widely held stocks on of all of them. And so looking at trading this one and maybe looking for a boost here, be it from earnings, be it from continued details coming out on AI, be it for any reason. This is one that it did make a spike high up around 198.5 this morning. It did get back about $3 of those, but still up a little bit here today. Let's just say it gets to 200. It's a big round number. There'd be a new level that we had never been to before. Here's a strategy that would benefit from that if that happens over the next couple months. And I know a couple months seems like a lot of time for only about $5 in the stock shares, but it would be a new all-time high. And we talked about every dollar in Apple in market cap is almost $16 billion, which is just incredible. And
we keep coming down a little bit there.
Float is for this, and it typically, just doesn't quite move with the same velocity as other names. So looking at the call calendar, 200 August SEP, $1.50 debit. You can see the risk profile, straightforward. The beauty of this also is how customizable
Did the docket drop?
Give it more room to the upside. You want to shorten that duration. You want to bet against Apple. You want to look at something to the downside. On the bear side, you could look at put calendars as well. You're just limited by strike availability. And
oh yeah, we have until 2. Got 30 minutes.
Customizable, risk-defined trade with $150 in risk, and one that peaks out. Its best case scenario would be right at 200. So some people believe that those big round numbers can be influential. They can act like magnets one way or another. If you fall into that camp, maybe this one is interesting for that reason. But just one way to look at it, risk-defined trade, looking for a continued upside move here for whatever reason over the next month and a half. If it got
we have volume there too on that sell-off.
All right, let's talk Microsoft, because the fallout isn't
the VWAP for now.
In Apple. It is falling over to names like Microsoft that have been seen as sort of the tech leader from the research side through OpenAI and its investment there. It's feeling it today with a huge turnaround intraday.
You know, it will be interesting to see how their pricing, their competitors' pricing stacks up to Microsoft's now $30 per customer a month, which we were debating, is that expensive? Is that not expensive? I think it sounds reasonable, but I guess it depends how many customers that you're paying for, and obviously the inner workings of these subscriptions, and it just feels like they just keep coming. But as far as the technicals go, this name is pretty much at session lows here, Rick. But another name that's been relatively strong, and Microsoft is always sort of that strong and steady player in tech. It doesn't necessarily see such outsized moves to say like a Tesla, but I actually think that's usually what investors like about this name.
Yeah, and it's tough to decide which of these two charts that we're looking at today looks stronger. On one hand, Microsoft had a bigger move from the intraday lows. We're up about 66% from that point. On the other hand, Apple's trend line was just straight up and very consistent here. The trend line here kind of begins with our last earnings announcement back in April. Since then, we've been trending up nicely, just pretty steadily. We had a bit of a breakout to the downside there, but it didn't last. It was notable, though, that it took us below our 21-day EMA pretty convincingly.
I thought they actually meant 24 hours?
Before recovering with another gap up and closing above.
I mean, I was thinking sometime within that. So
So it's always good to be aware of these types
could have come out any time before too, I would say.
You know, unfortunately, sometimes there's no way to tell until it's over and you realize that it was in fact false. But there's a couple ways you could maybe have helped filter this one out that I'll get to in a minute here. So we can see that the notable move upward happened yesterday. We broke above our old closing high, which was near 348.10, and we also broke above our +1 standard deviation channel. So as I said before, this is a measure of how extreme the recent price activity is relative to itself. So it compares if we're seeing an outsized move or not. And this move took us very far above our +1 channel. We were almost halfway to the +2 channel here, but we're giving back some of those gains today now, backing off a bit from those highs as well. Now, I mentioned before about kind of filtering and trying to assess these when you do get a potential breakout to the downside here. Look at the RSI. We can see that RSI, we held above the 50 line during those two forays to the downside that took us below our 21-day EMA. We can see that we held pretty consistently at that line that separates bullish momentum from bearish momentum. We stayed mostly on the bullish side here. We also had a breakout yesterday when we kind of topped out here a few times. We broke above it and moved into the overbought area. So looking at the RSI can perhaps help filter some of these moves out. Maybe you weren't convinced that the move was genuine because momentum was hanging on still. But you know, it's a tough one. The false breakout can be very challenging for traders here. And we can see that now our RSI as well is telling us that we moved out of the overbought area. As I said before, that's a more bearish signal here. You know, it wouldn't be crazy to see a retest of these old highs and this +1 standard deviation channel, considering how strong the gains have been lately. But to zoom in a little bit and look at some support and resistance here, as I said, +2 channel would come in right here near about 384 or so. That'd be quite a climb from this point here, but certainly not impossible. Anything could happen. But we've got our confluence of support right here at the two areas that I mentioned before, our old closing high and our +1 standard deviation channel just above the 348 level. Below that, we've got our trend line, and we've got our yellow 21-day EMA coming in near 340. And remember, the 21 EMA still pointing upward, still trending upward here. Be on the lookout for the shorter-term moving averages that you follow to start to flatten or even turn down. That could be an early warning sign that the trend is indeed starting to fail.
Yeah, and Rick, like you highlighted, overall an uptrend, seeing a pretty nice month. That's up about 5% month to date, and it was up about 4% this week, but giving back some of those gains. But all in all, a name that has still been an outperformer on the year and really over the last decade of following Microsoft stock. So we will leave it there. Appreciate the technicals. As always, Rick Ducat, our chart master. So now in trading this name, Alex, taking on maybe a bit of a different approach. They do report next week, so we do have that more near-term earnings catalyst, but also analysts, it just shocks me to see. I guess you made a really good point that we could just see analysts waiting for some more developments, so it doesn't necessarily mean that everyone's negative or perhaps less optimistic than some of the analysts' price targets today would indicate. But 352 is the average, slightly below where we're currently trading, although we're inching closer as we sort of fall here.
I think it's also a reflection of really just how impressive the rally in Microsoft has been. Those are at one point were probably above the stock price. The stock price just run a ton so far in 2023 and caught up to some of those price targets maybe ahead of schedule. But looking at this name and understanding the situation today, understanding that there's an earnings event on the horizon, I looked at a strategy, goes out, it would capture the earnings event in it. It goes out to the August monthly expiration. It's a neutral to bullish strategy, so it's sort of fading this sort of intraday reaction to the AI news out of Apple and its announcement of its project that's being referred to as Ajax and this downward moves that we're seeing in Microsoft. But also
Volume started picking up last 10 minutes on barbecue.
Greatest from a move right to 345, which is a price lower than where we're currently at. So omnidirectional, but neutral to bullish because the risk is also to the downside. It's called a skewed put butterfly. We're going out to August buying 1,350, selling 345, and buying 1,335. So we're selling a $10 wide credit spread, buying a $5 wide debit spread. That's how you get this risk profile. Those two short strikes converge together at 345. And so it's done for $1 credit in this case. That would mean that the strategy performs if all of these options are out of the money, above 350 in other words. It's basically just going to perform like a short put vertical. The credit received is the max profit on that, and you'd expect these options and hope for them to expire worthless to keep that. Where things get interesting is if it does get in between 350 and 345. That's where the debit spread starts working while the credit spread is still out of the money. Perfectly pinned at 345. It can expand to a theoretical $600 profit. $400 in risk though if all the options are in the money to the downside, which is below 335, and the break even is 339. So I think of these as sort of high probability strategies that you would do where you'd maybe be interested in the stock if it went a little bit lower, but you want to be risk defined. You want that lower break even. Maybe you even anticipate a little bit more additional weakness, but you feel like it's getting close to a level where it's going to stabilize. So sort of that almost buy the dip strategy. This is the risk defined version of it, Jenny. So I'm not going to go that far because, you know, obviously if all these options were in the money, you'd anticipate they'd offset and you wouldn't have a share position. But a 1-by-2 put ratio, which is sort of in this family, is oftentimes seen as that buy the
W
dip
on the
strategy.
Netflix short? What does that mean?
Ancillary to that.
And I think that was really well put. And
Hey,
obviously,
Julian.
a different way to play
Good, how are you?
the biggest names in tech and some of the strongest performers in tech we've seen this year. Also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to talk one of the biggest moves to the upside of the day. Carvana shares up over 25% following its surprise second quarter earnings release. We'll discuss those numbers more coming up next.
Starting to feel like you can get some gains with your barbecue position, huh? Yeah, we're getting close. I think we could hit 50 cents today. You might be green on your position today. I mean, we broke out of the range, so as long as it's not a false breakout and we hold this level now, I'm pretty optimistic for a move up to 56 cents. No, we don't know if or when shorts cover. Shorts are opening and closing positions all the time, just like longs. Highs coming down a little bit here. Testing the lows again.
Says when software is open, more people can scrutinize it to identify and fix potential issues. Now, this is not a nuanced type of strategy.
It's at the low of the day.
To software, this is actually how Linux actually thrived
It breaks.
early on.
Good for a little scalp.
The ability for freelance programmers and hobby programmers.
Not a good entry though right now.
Enhance the code, identify bugs, and that's also an area that could also help out Meta, where they're not actually having to pay developers to be able to really try to hold out or build out these systems. So it's very interesting, but this is not the first time Meta or Facebook has actually done this. They actually did release a library or a package in 2017 called Profit, which is actually utilized to forecast time series data, and that's actually available on Python and R programming platforms as well. So this is something that that's not really new when it comes to not only the software landscape, but also for when it comes to Meta. And this could be an area or an opportunity for them to try to accelerate their development in this AI sphere as they try to transition from less priorities like the AR headsets and things of that nature.
Yeah, and I think that's really well put, Kevin. I think the news regarding Meta is always interesting when it moves away from some of these headlines that are sort of ridiculous regarding Threads and Elon Musk versus Mark Zuckerberg. To me, none of that necessarily matters as much as some of these actual updates to the company and its overall business model here. But now we do have earnings next Wednesday after the closing bell on Meta platforms. And it's interesting because we just looked at Apple and Microsoft pretty much at their all-time highs. Meta has had a banner year. It's up over 160%, but nowhere close to its all-time highs. So does that make this name then perhaps maybe more attractive into earnings, or is it just still one of these names that is outperformed and could be priced to perfection?
Yeah, I think Meta at this point, I mean, it was a laggard, and that's why we are seeing this rotation going into Meta and maybe some of the other communication services type of names here. And that's why we were seeing the movement to the upside. Now, it could actually continue to move to the upside here. Now, we also have to just kind of keep in mind Meta had some significant headwinds going into last year because of expenses and their priorities. And this has been the year of efficiency, as people like to call it here. And now we are seeing some of the results. So if we continue to see results from just them being able to trim down their expenses, as well as like kind of refocusing their efforts on the core parts of their business, the market could celebrate that, and that could also create a little bit of a catalyst to the upside here. So we'll probably get a little bit closer before we start seeing what the market actually prices in from an option standpoint. Right now, it's a little bit too early to tell right now, but I would anticipate that implied volatility will probably increase pretty significantly as we get a day or 2 days before the earnings announcement. So looking forward to seeing what the results are going to be.
All right, great breakdown on just another story, of course, regarding Meta and all things AI. Everything sort of ties together today, Kevin. We'll leave it there. Senior markets correspondent for the network, and I'd like to bring back in Alex. And it's time for FOMO. And I will say that this is one of those stories that I saw even prior to coming into the office today, and I was like, we are definitely going to talk Carvana on FOMO. I knew it because I saw the surprise earnings release. I saw some of their debt restructuring, and I knew that this name would either move significantly to the upside or to the downside. So thankfully, it's on a positive note.
You know, shout out George Tillis. He kind of talked about expecting stuff like this to happen in sort of these troubled companies when they get the opportunity, massive equity upside throughout 2023. To take a chance to negotiate from strength, take a chance to increase equity to raise capital as this company tries to, as this headline I saw, I think puts it very, very succinctly and better than I can. It said, Carvana finally finds a gear other than reverse. As it's going forward here, Jenny, it's exciting. I mean, we joke about Carvana oftentimes just because it seems so kind of novelty, like you run out of ideas. Instead of just having a flat parking lot full of cars to come see, you then put them in the vending machine. But it did do some other stuff, e-commerce and deliver the car if you need to, try to service some areas that maybe don't have as many access to dealerships. But they're selling cars in the end, Jenny, and there's just not a lot of new here. So we've joked about it. But got to be, tip your cap to the leadership team. They're doing their best to make it through this tougher time the last couple years.
Right, and I will say that these earnings weren't necessarily as strong as this near 30% move to the upside would indicate. They did post sales that beat expectations. They did fall by about $1 billion on a year-over-year basis on losses that were better than last year.
BBBYQ below VWAP there.
But they are still losing money. Important to keep in mind, they also highlighted a lot of their gross profits per unit, which did come in better than expected, and they did see some of these higher than usual volumes of loans, which was obviously then an aid to their second quarter. However, what this means for their third quarter, they do expect their adjusted total gross profit per unit to exceed $5,000, and they expect to generate positive adjusted EBITDA for the second quarter in a row, which is obviously another step in the right direction here. Additionally, though, I think this was the much more important piece of news they released this morning. They disclosed they've reached an agreement with bondholders that will eliminate more than 83% of the company's 2025 and 2027 unsecured note maturities and reduce its required cash interest expense by more than $430 million annually over the next 2 years. They highlighted the fact that this transaction significantly increases their financial flexibility by reducing their total overall debt, extending their maturities, and lowering their near-term cash interest expense as they continue to execute on plans to drive profitability and further growth. And like you said, George Tales has harped on this narrative for so long. This company was running out of cash. So this is a clear benefit to Carvana. Shares are up now 960, like 1,000% year to date, and I'm not even exaggerating, but they continue to move. So it continues to fluctuate, although this name was at all-time highs back in 2021 at $377 a share. So we're still down about 86% off of all-time highs.
Yeah, it certainly looks a little bit better with the 50 handle than like the $5 handle, though. So I think investors are, they're taking this as they can. But in a situation where a stock has got heavy short interest, as this one does, and maybe potentially could even be hard to borrow, oftentimes when looking at trade strategies, Jenny, avoiding something that may have a short call in it could be the benefit of the investor, is that early assignment risk just really does increase if a stock is hard to borrow, especially if one is volatile like Carvana, and that volatility happens to the upside. So I looked at a strategy that just looks at everything on the put side. It's still neutral to bullish. The excitement is to the upside today in Carvana, so I wanted to make sure we reflected that with the trade strategy. Going out to just next Friday's expiration, selling the 48.45 put vertical. Volatility is so high in this that you can still get a third the width of the strikes for an out-of-the-money put spread that expires next week. And so very well could be entirely in the money. It's certainly possible for a name that moves this much in that short of a time. But break even is 47 and the stock's currently above 50. Collect $100 essentially on $200 in risk. So 2-to-1 risk to reward, neutral to bullish. If we look at the risk profile, straightforward, elongated Z formation here. It starts at the max profitability zone, which is that $100 again. 47 break even, below 45 is the risk. That's $200. We looked at these a bunch, Jenny, but it's rare, and it really takes a certain type of stock to have this short of a time frame, especially post earnings or post a release of big information. And still collect this much premium. It just shows how volatile this name is.
It does, and we talk a lot about the short selling in this name. It did see around 63.5% of its shares sold short, but that number actually came down. It's at around 55% now, which is still extremely high, but coming sort of back down to earth here. So nice day, obviously, for Carvana. Nice year.
All right, back to VWAP here.
We'll leave it there for FOMO. Now coming up next, it's time to look at Airbnb, a name that has reversed some of its intraday gains, now lower on the session after touching 52-week highs.
Is that the Airbnb graphic? Huh. DNA's been ripping, so I haven't really followed it for a bit. I guess you're the only one that was really tracking that. Yeah, it's had a nice move. Yeah, I'm still in lift. Yeah, today it just started to kind of break out and fill that gap. So it's looking nice. Probably close before earnings. Hopefully I'm up more.
downside today. This name is no stranger to volatility. Walk us through what you're seeing.
Yeah, down around 17% after the company reported that they are going to remove their 99-cent ordering processing fee by the end of the week. Obviously, investors are selling off on this, but the company noted that the removal of the fee will not have any material impact on their previously announced guidance for fiscal 23, which had revenue expected between 3.71 and 3.8 billion. If you're just now hearing about this, in June, the company announced that they were going to add this 99-cent fee on all online orders over $10. The fee was really aimed at customers that use Toast and not the businesses who had no control over the charge. Toast also was going to be paid a percentage fee on every credit card sale. The fee potentially was worth hundreds of millions of dollars in annual revenue, and the gross margins would have been significant as well because it doesn't take much to implement this type of thing. That, of course, is what we're seeing the big reaction today from investors.
So with this then, Jeff, had it actually gone into, service and they started seeing, a drop off in customers, or was this just backlash quickly that they just pulled this out, and obviously it impacts some of their guidance and stuff, as they say in sort of the release here. But I guess it's such a quick turnaround. Obviously, when I'm looking at this, it's like they did this because they needed the extra cash. They're trying to find a way to prop margins up. But, they say, explicitly, we made the wrong decision in a letter to customers. They got some backlash clearly on this.
Yeah, absolutely. They got backlash from customers on this. You've likely used this app before, sometimes maybe not even realized it if you've ordered something online. Customers are typically not the ones that we see getting hit with these fees. It's normally been the restaurants. Now, the restaurants may raise their prices in order to try to, cover the fees themselves. That is the big question mark right now, though. Have customers really left the application, left the app, or have restaurants left the app because of this negative impact that we've saw from this fee? Or have they got onto this quick enough in order to kind of stop any sort of big abandonment of the app altogether? You've got analysts out there that, are talking a little bit about what this would have done for the company. D.A. Davidson analyst said it could have garnered between 20 to 30 million a year in revenue. We saw Bernstein analysts talk a little bit about the run rate on gross profit impacts, but expecting about a 7 to 10% run rate there. So there's some big question marks on what they're leaving on the table. But I think what we're looking here is a company that they saw a potential for a big abandonment on their application. They wanted to make sure to get ahead of it.
Yeah, Jeff, I guess I'm wondering the growth story for Toast here, because I do know they're the back-end payment processing of all of these different restaurants, but they obviously aren't in all restaurants, or else they would not be a $22 stock. So as far as growing and building out their infrastructure, do they still have significant upside in terms of that aspect? Because this name is up only like a measly 24% year to date. I know we're making a monster move to the downside today, but you'd think that with some of the names that have seen such strength lately, like a Shake Shack or a Chipotle, this name would see some benefit, but it just hasn't been all that exciting on a year-to-date basis.
Yeah, it's been a relatively good growth story, especially if we look at 2022. Had about 79,000 restaurant locations using at least one of their products. That was about a 40% year-over-year increase. They ended the year with about 91.7 billion in gross payment volume. One of the issues for the company is their largest revenue stream is that fintech solution, which makes up about 83% of the revenue. That's them getting paid from those fees that they charge per transaction. The subscription revenue segment, which is what gives the restaurants access to their software, that has a very high gross margin rate, coming in about 65%. But right now it only accounts for about 12% of their business. So they're certainly trying to push that subscription revenue to become a higher driver of revenue overall. And that's really probably where we're going to see most of the growth.
Jeff, it just seems like maybe this 99-cent fee was just too over the top, too in the face of customers. Like, they're taking a little bit here, a little bit there. Obviously, the partners they have with the restaurants and the other hospitality companies they work with, they pay on the back end. It just seems like the negotiations more on that front would have been a better way to do this. So I'm sure there's been some hostile internal conversations at this company regarding this. It's controversial for customers. It's got to be controversial internally as well. But a company that really I had tipped my cap to for how well they had seemed to really come in and disrupt this space. A pretty big misstep, but hopefully, like you said, for investors, reversing course relatively quickly. But we'll appreciate it. Thanks, as always, for joining us. Jeff Pierce, Senior Manager of Derivatives Trading at TD Ameritrade, joining Jenny and I. That's going to do it for us as well. Thanks, as always, for tuning in. Coming up next, we got the watch list.
Is it bear market? I thought it was a bear market rally for probably the first quarter of the year. Once we broke, started to make some higher lows. A change there. Somewhere around here. Thinking about closing out of my Tesla today. I don't know if I want to hold through earnings or not. Nice little cup there on Viri. Yeah, we're looking at top. This one, you can do today on it, but being that it's Chinese and sketchy, it can shut down any moment. Yeah, I mean, it's in a bull flag. You have a pretty tight stop on it. You know, the stop of there breaks the low of that bull flag. Doesn't always have sustained rallies. This last one was what, 2 days? You might see a little 2-day pump. Barbecue dropping below VWAP there, 38.10, up 1%. A bit confused by the price action today on barbecue.
We saw the New York Composite Index, which actually comprises all the names here at the New York Stock Exchange. So it's not just a tech-based sort of index. In addition to ADRs, it even has an international touch. So it shows that the market rally, at least with a 52-week high there, that something's happening in a broad-based fashion.
Yeah, I mean, everything looks good, right? It really does, and it's hard to argue with that. You know, it's good for everyone along the way. You know, like I said, it's not just tech stocks. They stand out because of their big numbers and those volatility things that you were just talking about. They can swing all over the place. But, you know, there's a lot of things. But basically risk on investments right now, you know, people are not afraid. They're thinking like, hey, this rally is going to keep going. And you even mentioned that even Bitcoin is up, and the Bitcoin miner I talked about, Riot Platforms, is up 400+% in a year. These crazy numbers. AI stuff is still huge. That's a big factor. And even Apple was talking about adding in AI and things like that. But we see Coinbase is up this year. It's still obviously down from where it started. But it's moving in the right direction.
Fine at the low of the day.
Carvana, all these big names, which aren't necessarily tech only, are doing. So we see, high option trading as well, tied to many of these companies. So there's a lot of optimism in the market. Now the question is is it looking like late December 2021, and we're going to see that fall off hit? And we'll
little
see.
bit
A
day
lot
there
of
on
that has to do
SPY.
with the economy. Good news is companies are coming out with good earnings. But right
Just
around
filled
the
the gap.
corner, the Federal Reserve is ready to raise interest rates on it. So, what is that going to do to everything? Because lending
Oh, it didn't
is
fill the
getting more
gap.
expensive. Mortgages, things like that, and a lot of these things are the
Yes, it
big
did.
factors that drive the underlying market. So we don't want to see, interest rates cause too much of a slowdown in what's going on right now.
But it sounds like you're apprehensive, like there's this run-up that has happened, and then you expect a sell-off. How do you prepare, assuming that's right? What kind of strategy do you have here?
Right. Well, you're right. It could unravel, right? And I guess we've been around long enough to see that it has unraveled right in front of our eyes sometimes. And that's where you see the contrarian saying, hey, there's a perfect storm for a crash to occur. I'm inherently a bull. I feel like most people are.
Break out of that bear flag there.
We want to believe that, things can be better in the future. But if it's all going to get tied to these interest rates, if interest rates keep moving too quickly up as they have in the past, like I said, I'm super glad they stopped and took a pause last time. Sure, we're going to get a little higher rate, but what we don't want to walk into is stagflation, really, is the ultimate thing. So you kind of asked, how do you protect against it? Well, it's about being balanced. It's about focusing a little bit on hey, these investments, are they paying me anything? Am I getting enough dividends to go along with it? There's nothing wrong with doing some growth focus and focusing on the Teslas and the Netflix of the world, but it can't be your only position, right? You got to make sure that along the way, if you're getting a good dividend stream, well, now you can handle that volatility a little bit better. You definitely want to make sure you're constantly diversified. And
let me ask you. Yeah, let me jump in. I know you like a few names here, and I don't want to miss out. AT&T is a name that you like. AT&T has hit the lowest levels in 30 years. AT&T was a name that the generation before ours loved it. It was a dividend payer. That and Verizon. There are a lot that there were people saying today, widows and orphans have AT&T and Verizon, only because it was these telecom names were so steady. And now AT&T at a 30-year low, basically. Why do you like it? How high do you think it could go, and when?
Yeah, so it looks so bad, which is very appealing to me. It's down 15% in the last 2 weeks. Now, I wish we had
8%
talked
just
yesterday,
today.
right? Because today obviously it took a pretty big jump. It's up $1 or something like that today, but they're getting hit with a lot of environmental problems right now. Now, I don't know that AT&T is going to go, to 100 or anything like that, but it
Upwards up
easily
10%.
could double from down here, without even being a problem, and it has a huge dividend, right? So, when things look the worst, that's usually the time to step in. I don't think this lead insulated telecom cable, which is hitting the whole industry, is as big a deal as it's being made out to be. And I think we're going to find that out, right? Because it's not going to turn into a legal problem and things like that. And all of a sudden people are going to say, well, hey, AT&T is still, paying out a good rate of return. It's at a big discount.
Yeah. Do you want to give me a few seconds on Pfizer?
Yeah, I mean, Pfizer, they constantly are doing well on a year-over-year basis every time. They have promising drugs coming out. Like I said, their weight loss drug is effective. They've done a bunch of recent acquisitions. They just look like a long-term, kind of can turn around that chart that we're looking at right there in the long term, just from their future drug acquisitions. So same thing again, when it looks really bad, that's when I really like to, start walking in and buying it on the way up.
Yeah. All right. James Long, great to see you. Cool luck. Associates. Thank you.
Thanks so much.
Thanks, James. Later this hour, we'll spotlight another kind of electric vehicle, buses. CEO of Green Power drops by to discuss their latest earnings. We'll take a look at the state of Hollywood, how the actors' strike impacts some of these streaming stocks. We were talking about that earlier, names like Netflix, Disney, and more. And our panel prepares for IBM. Those earnings are due out as well. Find out all about that. And investing strategies up next from Sound Planning Group.
SPY setting up a pretty bearish daily candle here. Next now down 7%. To see this thing bounce on that $1.40. Barbecue kind of bounced on that line we just drew there back up to VWAP, but it's below kind of the bull flag. I guess now it's not below it, but right at the bottom of it. 38.41 up 1.9%. Not a good show of strength for middle of the week here. Sometimes we rally into end of week, but no. I set up another bear flag down here. Joby's down 16%. It puts on Joby here for $3, so got a little ways to go. That's a new low of the day on SPY. They didn't offer shares or anything. I don't know why it started dumping. Just because of analysts, maybe.
Actually the best one. I think again that it's the pivot rally that we're seeing here today. So we haven't hit capitulation. We're kind of at the last leg of a market cycle, in my opinion.
Capitulation.
And who knows when it ends? But we're going to be taking advantage certainly while the opportunities are here.
Tell me about the Fed. So we have the Fed meeting next week. Your thoughts there?
Okay, so as far as the Fed goes, Jerome Powell is actually pretty dovish. Okay, so his last hike was considered a hawkish hike, or I'm sorry, a dovish hike, and then he had a dovish pause, and then now we're kind of in this in-between place. I don't know, is he one or is he the other? So if we get one more hike, it seems like it's priced in and that they should do it, if it's priced in to do. But the Fed is going to have some big problems on their hands, in my opinion. And the reason for that is that we've just flipped the capital market here, and credit is getting a lot more expensive. Your piece here on Carvana, and how they had to, remetabolize their debt. I think that this is probably one of the first stories that we're going to hear, as there's going to be more stories coming out of organizations that need more capital, but they have to borrow at a much more expensive rate. The other thing that to note here right now is that if you follow the United States dollar, we've actually slipped quite a bit here within the last, month. And if we're looking at that, just understand something. Commodities are priced in U.S. dollars. And so if we're buying commodities in U.S. dollars, we can afford more because we make those U.S. dollars. Well, if the dollar has gone down and we can't afford as much, that means our money's worth less. That's actually an inflationary sign. And so depending on what the dollar does next from here, I think it's actually really going to determine what we're going to be seeing for the inflation print as time goes along. And so I think Powell recognizes that and knows that, although that's not a commonly understood deal, because this higher dollar has actually been doing Jerome Powell's job.
So you like healthcare and you like metals and miners. Tell me a little bit about the opportunities you see there, and even some foreign markets you said you like.
Sure. Well, let me just stay on this.
On each one,
Yeah, sure. So, what we're seeing right now is just like basically PE expansion. So earnings have to catch up. And so I'm a little bit concerned about getting overheated on those 7 to 10 stocks, that have just been rallying so hard here. As we look at healthcare, I think that this is important to understand. A lot of people would have gotten procedures during COVID, but were not allowed. And so as we look at and understand the healthcare system right now, they've got a lot of backlog stuff that's going on.
Interesting point.
And so I think that that's a very bullish place to be. Obviously, they finished strong here recently when we looked at numbers, and which
like
leads
that
me
bounce
to,
on Zim.
So where are we at here today? I think as far as the cost of things being expensive, one of the cheapest plays today is actually metal miners. And what's interesting is that whether inflation goes up or the dollar weakens, they actually own commodities that can be really valuable in that time frame. And so I think metal miners have never been, frankly, better in comparison to what the S&P 500's valuation looks like. And then I guess the last in the international statement would be this. The world is changing right now. We're looking at more friend-shoring ideas with different industries, and so we're going away from China and we're looking at India. And we all know that India has been a back office, for many companies, Dell and others here over the years. But now they're starting to get into manufacturing. And as far as India goes, they have 2.5
Might look for some
people every
longs
single
on
year
Zim on a
that are
pullback,
graduating with
maybe
STEM
tomorrow.
degrees. And so these are the degrees of the future that are really going to be able to, build and establish and take us into some of this next place. So I think India's on the rise. I think this is a trend that is just beginning. And then ultimately, these things, can carry for decades even. So I think they're on the rise right now. I think the United States is doing fine. The labor market's really strong, but we have some challenges here in our macro world and backdrop that just leave me a little bit concerned. So I'm cautiously optimistic as we're going forward here into the future.
David Trzaskowski, great to see you. Thank you always. Appreciate your strategy. Thanks, Sound Planning Group.
Appreciate it. Thank you, Nicole.
Coming up next, time to plug in for some electric bus discussion. Green Power CEO is standing by to provide the latest on their Beast buses. The watch list will be right back.
$230. See if barbecue can hold this level. It's not a great look for a breakout today. Green to flat on barbecue. To red. The lack of volume and push out of that new high wasn't a good sign. I might just need a handle now formed on here. Down 1%. There's a gap fill down here too at 37 or 36.90. Down 1.25, 37.21. One and a half. Highs climbing up here again. We've got an inverted head, inverted shoulder. See if we build another one. Well, flush there on barbecue, down 2.6% now. Build that gap. Eyes rallying up here to VWAP. There's 3% down. What happened? Just this breakout, it's a false breakout. Low volume. I don't know, wasn't strong. So I think I might need to build a handle now. Making a little head and shoulders here on the breakout. Or than kangaroo bedpost. I'm not excited for it. I don't know anything about it.
tech-heavy NASDAQ coming off
Liechtenstein.
those reports. So lots for investors to keep an eye on here today on the close.
Yeah, I mean, look, the whole group has had an incredible run. And that's one of the reasons why they have to do all this reweighting, because they're just making up too much of the indices. Let's check out what's going on with the dollar. I saw the dollar right at that 100 level, and UK inflation gets a little bit of a break.
Yeah, after an incredible run of its own, right? Talking about the NASDAQ to the upside, I've got the dollar showing some of the weakness we've seen and the trend to the downside there. Now, yes, to your point, it has come off the lows here today. It's up on the day by about 1/3%. And, you know, normally we are talking about the euro currency, for example, and the influence that that has. Here you can see the strength in the euro. That equates to weakness in the US dollar, recently up to 113. It's coming off here today as well, but I think most of this is due to the British pound, and well, this is after that softer than expected inflation data. The pound came off. We're currently trading down by about, well, as we look here, almost 1% on the day. That's a significant move. Core CPI coming at 6.9%. We've seen the first downside surprise in 5 months for UK inflation, below 8% for the first time in more than a year now. The BOE looks like they're going to target something in the range of just below 6% in terms of their peak rate. But when you have the British pound lower to the extent that we've seen, we just looked at it on the intraday basis. Take a look here at the run-up that we've seen on the daily, because now lower on the day by 4 days in a row. We've come off 131, but you can see it just slowly starting to reverse the trend, if so, in terms of what we've seen. This is the first run we've seen 4 days lower in a while here, and we'll see if this is trend reversal or if we're just going to start to consolidate up here, Nicole.
Thank you so much, Ben Lichtenstein. Great to see
Lichtenstein.
Time to take a look at the streaming space.
Getting a little bounce on barbecue. Could be setting up a head and shoulders on the breakout, but also a break of this channel. Get another shoulder over here for me outside of that trend.
What are the threats to some of the streaming companies?
Yeah, thank you for having me, Nicole. Yeah, it is monumental. Like you said, it's
Looking
been
for
50, 60 years,
a pullback if that's the case. Maybe down to 33.22.
I think the biggest issue is that this comes at a very inopportune time for a lot of these streaming.
Oh, that was good for a gap. Maybe. I don't think so.
Right? A couple of years ago, it was growth at all costs, invest.
I wouldn't call that a dip.
Try to build your sub base. And now,
but yeah, I mean, you're getting a bounce off of it. You've got VWAP up at 38.51.
Trying to figure out how do we make money in streaming, and it's been a challenge.
That wasn't like the court hearing dip.
They're either raising prices. I think they've all raised prices.
We're at the highs,
on content.
So it's a little different here too.
Out of a lot of larger players about how
and it didn't sustain over that breakout level.
Large streaming services like Disney Plus and Max and Paramount.
We'll see. I don't like that it broke these trends.
From their service to try to save.
I don't like how weak it was above the breakout. I don't like the low volume. I was saying it today too. Like, kind of sucks on this breakout. That was what I was expecting. Buy there above VWAP.
But now you have the actors joining in, and production is going to be coming to a standstill basically now. And so
I'm keeping some shares.
Going forward.
When we think about
I'll check it out tomorrow.
King, and that's how these companies really make a lot of their money, is by having the best content, right? I mean, that's sort of the premise.
I broke VWAP there.
Had Netflix changing the structure, cutting its basic ad-free plan. The ad-supported tiers, are those catching on? I mean, do you still see Netflix as the leader in the group? Can they make it through this kind of strike?
Yeah, so, I think Netflix is probably best positioned. One is, they've been spending a lot on content. And the good thing is, these companies have actually been through this somewhat with COVID, right? Where nothing was worse than COVID in terms of everything stopped. And still saw a decent pipeline of new content because a lot of their content is front loaded and these decisions are being made. So, while the strike won't have necessarily immediate effects, the bigger threat is if this strike kind of lasts for another 3 to 6 months and goes into the fall season, because then you're going to start seeing pressure on, over the next few months, Netflix and others will have content that they'd already created. As the strike drags on longer, it's going to be less and less kind of new content that's going to be out there. Now, like I said, Netflix is probably a little bit better positioned. One, because their pipeline is bigger, and two, they do a lot of non-US based production. And so that doesn't get covered by the strike, but still they're, over time, the less content there is, like you said, content is king. The less there is, the more likelihood is that people will churn off of their subscriptions because there's just not enough content to keep them on. And that's where the risk lies.
What about some of the ones that seem to be, I've had on experts, and it's not that I'm pinpointing it, but Paramount, for example, seems to be struggling more in a different way. Is there room for all of these services to survive? What do names like Paramount need to do more of in order to continue to grow and be a real success?
Yeah, that's the $1 million question, right? We've always said that scale matters in streaming, and we see that, right? With Netflix, they started making money when they had 200 million subs, and they're charging a certain level, right? And they have this global scale because all this content that you're creating, which is expensive, is amortized against your subscriber base, right? So the bigger it is, the better bang for the buck you get. And so scale really matters, and Paramount is clearly the smallest of these large players. Warner Brothers Discovery is fairly large. Disney is obviously very large, and their subscriber base is fairly big at this point. But Paramount is still kind of smaller. And while they've had good growth and pretty strong net adds over the last year and a half, they're still well behind others. And then they're also facing acute challenges in the fact that they don't have the same balance. They don't have parks throwing off massive amounts of cash. They don't have Comcast as for Peacock to support them with their broadband business. So they're in a much more precarious position on their balance sheet. And so all of those aspects create pressures. And then obviously we layer on the strike, which, only exacerbates that. So, for a variety of reasons, those, Paramount is more exposed, and it's a little bit more challenged because of these various issues that are hitting it all at once.
Right, and it actually did say here on that Paramount's parent was discussing some options, disclosing some financial risks that they were facing, and in talk with creditors. So, I mean, it's clear here from the Wall Street Journal as well. Jawad Hussain, thank you very much. S&P Global Ratings, thank you. Still ahead, we'll bring in our panel to discuss IBM. The AI business is booming for IBM. We'll take a look. Earnings expectations next.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go to the Analyze tab and select Fundamentals.
BBIG climbing back up to VWAP. Ten minutes to power hour. We've got some lift calls on queue, or not lift, sorry, Zim. Maybe they'll fill tomorrow. I like its dividend dates coming up next month also. Oftentimes you get a rally into a dividend date. People buying it up for the dividend. Did just bounce off this nice level. Has this inverted head and shoulders here. Break out of this range. Falls this one.
Multiple.
Yeah, and as you talk about the software growth, I mean, Red Hat, a big part of that growth in the quarter. So we'll be watching for that. In the meantime, how the company is facing the backlash over some of the new source code policies that are reportedly making it somewhat difficult to create operating systems that are compatible with Red Hat. Melissa, good afternoon to you. Wanted to get your thoughts on IBM, which actually, unlike tech in general, this is a loser year to date.
It's definitely a loser year to date. And when you look at the overall market and you compare IBM with the overall market, it looks terrible, quite frankly, because the market's been rallying since January 1st. And on top of that, the last time the stock made brand new all-time highs was 11 years ago. And we had a very bullish market in 2021. And even then, IBM couldn't get a leg up. So IBM, for all it's worth as far as a long-term play, people like it, the dividends, everything else. Even if it has a good earnings, even if it reacts positive to their earnings tonight, I'm not so sure if it's really going to go anywhere. It hasn't seen $200 a share in a long, long time.
And, final thoughts here, Dan, on IBM before I get to Netflix.
Yeah, I mean, I would agree with Melissa. I mean, IBM has really turned into kind of a cash flow dividend stock. Their yield's about 4.99. We come into the second quarter, both revenues and earnings are expected to be flat. I think consensus estimates for fiscal year 2023 are looking for about $62.5 billion in revenues, which is only about a 3% growth rate. So at this point, they have been kind of missing out on this big bull market in tech.
Yeah, and you have Amazon and Microsoft and others in the world of competition for the different businesses, right? Let's get to Netflix, which has been a winner. Melissa, your thoughts on Netflix?
Well, Netflix had a massive rally yesterday. If you happen to capture that yesterday, stock ran up more than $20, and I don't know if that's going to screw up whatever it does tonight on the earnings, because to have a rally like that 24 hours before the earnings yesterday really looked like an earnings day, but it wasn't. So, I think the problem is for Netflix, again, Netflix is in a downtrend. While it's been trying to make a comeback, it is still in a downtrend. Remember when we had that crater gap in Netflix? It was like more than a year ago. It was in the beginning of 2022 when it had earnings. I think it was April of 2022. The stock really hasn't recovered since that. And again, the last time this stock made brand new all-time highs was years and years and years ago. So while the overall market, that's the problem with the market. I want to say this really quick about the market. The market is rallying. Yes, we're up for the year. but you're not seeing the same type of rally and bullish market we've seen in the past, where you have this sector, this sector, this sector, and you have everything going together. It's this Nvidia's up, and you have Apple up, and then you have some banks look good, some banks look bad. Like, not everything is really going. It's like you're trying to push some of these stocks up the hill, and some of them just don't want to get going. Netflix has to be up a lot. Netflix has to really get going tonight for me to want to buy it tomorrow.
Right, and you make a good point. It went from, in 6 months, it went from $700 in the month of October and then had that big gap down in April of 2022. In fact, it went from $700 down to $162. It's been creeping back, but certainly not back to those new highs. It's at 478 today. Dan, what do we need to see from Netflix? I mean, we know that they've been cracking down on password sharing. They've had the ad tier system, and they're reducing, at least in part, to make money.
And Nicole, obviously, Netflix is going to trade on subscriber growth. The consensus for the second quarter is 1.8 million new subscribers. They're expected to do 4.7 million in the third quarter, so everyone will be paying attention to the guidance that management gives for the upcoming quarter. Also, we want to learn more about their basic with advertising initiative. We think there's about 5 million subscribers that have signed up for that. That's their $6.99 a month service, where you have a lower cost average membership associated with getting the feeds, but you're getting advertising on top of that. So there's a lot of enthusiasm that maybe a year from now they could start to kind of monetize more of these subscribers that are currently getting a reduced membership with advertising. So I think that's where the street's going to focus. Also, you're going to get a million questions, Nicole. I heard you talking about before I came on about the writer's strike. We know that Netflix management has come out and said that they don't expect to have a material impact for fiscal year 2023 into 24. But let's face it, if this strike goes on for a sustained period of time, you're going to have to start to wonder whether Netflix, in terms of all those streaming shows they have, are going to start to be impacted. So I think that'll be a big question that's going to be on a lot of analysts' minds.
Yeah. In 10 seconds, Dan, would you own either or both these two companies?
We own IBM in our equity income model for the dividend yield. Netflix is a stock that is on our hold list, but not on our buy list. So those are two stocks, that's what we're active in right now.
Your thoughts?
No on IBM. Netflix needs to get over 500. If it does that, then I'll look at it as a long.
Yeah, I'm sorry to step on you guys, but I just really wanted to get both your viewpoints here on whether these were must-owns or maybe wait and see. Dan Morgan, Synovus Trust Company, Melissa Armo of the Stock Swoosh. Thank you both. I'm Nicole Petalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. right here on the TD Ameritrade Network. Keep it right here. Oliver Rennick, Market on Close, next.
Still no shares. Yeah, no shares since yesterday at 10, I think, right? Still seeing that 200% at 225. Fine, just hang out a VWAP. Back to safety for power hour. Probably just chop around here. Maybe a little rip, little dip. Kind of good support. Maybe for end of day. Looking at the longer term, I'm not liking it if it holds here till end of day. Like a head and shoulders on a false breakout. But not to say it's not just cup and you're going to complete a handle. But you never know with the cup, because that could just be a double top. So I locked this fib retracement and see if that plays out. It's a little difficult because I don't know where you'd count the bottom of the cup. Usually I go as far down as I can. In this case, it's big wicks, so I'm kind of trying to put it at the bottom of where there was volume traded. But this could all change with if they release any news that they're talking about in the bankruptcy court yesterday. Consolidation. It could be. Usually you don't find consolidation right under resistance unless it's resisting. If it's resisting, you see some sort of formation to go to the upside. But I don't know. Could be. $10 on PacWest. Nice. Roots up 17%. You can get consolidating with head and shoulders in there. But it would just have to hold above the trend if it was consolidating, and that's where I drew this line. So if it's not holding that line, then it's starting to taper this trend. Then we're looking at something more like this. And that would also go along with a handle if it bounces here.
One is the customer choice and the laser focus one trick pony style business that a lot of these had been engaged in.
SPY's climbing up a little bit.
Really else to offer customers when they yank their deposits. Notice Western Alliance pushing now really to the highest since that first big drop off. PacWest almost there, but we are generally seeing a relief trade in the sector, even for some of the worst names that look like they were on the chopping block, such as these two. The numbers were not fantastic for a lot of these. They're happy to compete and spend to make sure their customers don't run away. And a lot of these regional banks, as you move down the market cap spectrum, but for the most part, it seems like that story is not an immediate ticking time bomb for this market. So let's go on. Carry up 3%. Generally, value stocks are doing pretty well. We've seen the market now show some real sustainable rotationary tendencies here over the last couple of weeks. When you get some of the less exciting groups working, you're going to see value doing a little bit better than growth. Real estate is definitely in that category right now. One of the things that did show up in some of these bank earnings is that there is still generally a pretty rough outlook and reality already setting into the commercial real estate market. But again, it's one that's been very well telegraphed. Let's talk this chart. Tesla coming up this afternoon. This is important to realize that the shares are actually still downtrending off the highs. Easy to not realize that given how fast it's been moving this year, but actually we're below the previous major high, which is below the one before that, which is below the one before that. So that's still a downtrend. That means Tesla's pretty important, because if we can start trading above the previous big high, that would mean Tesla joins in the camp of some of the full technical reversals that the mega caps have been, for the most part, seeing in NVIDIA, Microsoft. Alphabet's pretty close. Amazon is in the Tesla camp here, downtrending. So just keep that in mind going into earnings here, that while it's been a very good 6 months for this general growth category of companies, they still have to do some proving, some of them on the charts, Tesla being a big one, and of course Amazon, the other real laggard. But Apple today is where our focus is in the big tech world. Let's start there. Got Renita Young, Kevin Hanks here with me in studio. Apple shares up about 80 bips here, Renita, and of course they're not going to get left too far behind on the AI train.
They're not, and that is the key today. So Apple, first of all, has woven AI into its products over the years with Siri.
Of course,
Of course, right?
Yeah, we can't forget about that.
We can't forget about that. But without any huge, meaningful announcement going,
I'm melting up some more here.
It's now playing catch up,
yeah, it is.
I should say. And that's why, rumor has it, Apple's working on a chatbot that'll rival ChatGPT and Bard. And so this report actually comes from Bloomberg News, who says that Apple's quietly working on these AI tools that will rival those companies' AI chatbots. And their sources say that Apple's built out its own framework, and it's known as AJAX, and it'll create large language models as the foundation for a chatbot that's kind of going by code name Apple GPT by some of the engineers.
But they're going to call it AJAX?
But they're going to call it AJAX.
Man, that's
exactly.
cool. I like that. That's
cool.
what my grandpa used to call me, AJAX.
Oh, that's adorable. I'm going to start calling you AJAX. I'm not your grandpa, though, but I'll start calling you AJAX. But, so seriously, though, this is a pretty interesting development, because we've learned that Apple has already deployed some AI-related improvements more recently over the past year or so, but several teams have been collaborating on these projects. They say that they're trying to preemptively work out any privacy concerns from the technology, and that's huge because we often hear about privacy concerns after the thing is already created, and they're already working on that right now. And it's no release date yet. In fact, there's no word that Apple even intends on releasing it to consumers right away. But right now, they do hope to, according to this Bloomberg report, make a significant AI announcement at some point next year. So it's a lot of uncertainty, but Apple will not be left behind in this AI boom.
Yeah, shares have definitely not been left too far behind, but yeah, they have not really been a huge part of the AI.
Got that inverse head and shoulders on the SPY.
Even though, you know, it's like we kind of forgot some of the companies with the most already present.
Even Tesla high of the day.
AI. People kind of omitted Tesla from the convo for a while. It's like, dude, they've got self-driving cars.
Yeah.
And then Apple too. They've got phones and the assistant, the co-pilot. I didn't even figure out what AJAX means now, the origin of that phrase. Maybe like a jack of all trades, Kevin?
I don't know what AJAX means, but here's what I do know. Apple has two things. They have the delivery mechanism for AI via the phone and via Siri, and they have boatloads of cash to invest in AI,
right, that's
Oliver.
important,
So if you don't think they're a major player, just wait a minute and they'll show you. So
True.
yeah, I think Apple, and I think if you noticed, the NASDAQ weakened when Apple made that announcement today. It was during fast market that news came out, and the NASDAQ actually softened some of its gains today, Oliver. Why? Look at the past relationships in streaming and what hurt streaming. competition. And if you think that everyone's not going to get into this AI business with the price tag that Microsoft just put on these things, competition, I would expect all the big players to be playing in AI.
$30 a month. They're how do I get in on that?
Yeah. Now we know why they were so excited about AI. Basically, some of the subscriptions you're tripling from $12.50 to $30.
Yeah, it's huge.
Incredible.
All right, so Apple shares keeping the NASDAQ from falling further, but also maybe inducing a little competitive fear in the group. And by the way, we're pretty much flat, so we're steady, hanging on, going into Tesla. Let's talk to banks for a sec, because I think we can kind of close the book on that sector, Kev, with them all done, or we need to wait for like every single regional bank to come out?
Wedbush put out the note today on Western Alliance. It seems to, I mean, the stock's up, what, 8% on that news? If you look at the bank section of the Russell 2000, it's basically completely green across the board. Take the banks out, the Russell 2000
still rallying here.
Actually, if you look at the overall heat map, but boy, the banks are green across the board. So this is a wave of rally in the regional banks. As you're right, Oliver, the overall risk level keeps dissipating on the
that'd be
downside.
nice.
And I think it's a Wedbush
Little bouncer on
raised,
barbecue. Got
Western
few up
Alliance
to
from
3849.
$45 to $50, I believe, today. Western Alliance, yeah.
If you can break that or
more good news
rejects there.
Yeah. Confidence seems to be.
There it is,
the name of the
3849.
game, whether it's the banks, which
3848.
had pretty mixed earnings as we went through these, but still generally had good responses by market participants. And then the fact that you've got, Netflix firm and the others going into earnings.
Broke VWAP 3859. The dip did get bought up to some extent.
That is, of course, our theme that we've been saying every earnings season since I got here. It was better than feared.
Right.
And we saw that for sure with PNC's earnings yesterday. It's considered a super regional, but it still did give us a little bit of a view into what the regionals will look like. Now, it did beat on earnings, but revenue actually missed expectations. And then it saw net interest income drop just a little bit. So it was a mixed picture there too, even with the biggest of the regionals.
That was kind of the case, it seemed, for a lot of these, was that if you had chosen to have these earnings a year ago, you would have said, oh, let's not go that way. But now that the market's come to terms with it and we firm up a little bit, one of the big shorts from this year is turning around. PNC up another 1.5% today, trading the highest since mid-March. Thanks, Kevin and Renita. Good start here for us, putting things in perspective. Danny Kirsch joins this afternoon. He's the head of options at Piper Sandler. And Danny, that regional bank trade that we were shorting with you at the end of last year, guess it's finally turning around.
Yeah, I mean, I think she made a great point. Better than feared. That just seems to be like the bar is low enough in that area, and money is dying to go elsewhere beyond the AI fueled rally. And it seems like anything that's been beaten up is just taking off. And it's like, it's almost all the same thing, right? Regional banks were killed, so now they're rallying to like an extreme degree because their earnings have been better than feared. You also had a rally after the stress test. No one failed the stress test, which we jokingly call an open book test. They know all the answers before they do it. But that was another sign. It's like, okay,
at least they're looking at the book.
Certainly some. Well, it's like anything. It's like at this point, it's like any known catalyst seems to be bullish.
Right.
And it's this money sort of spreading out. These earnings are coming.
Okay, I'm out of that long one.
Names, and now people
MES for now.
want to get into the space. Whether or not the outlook going forward is better or worse, I make the argument it's probably worse. The yield curve is still inverted. The Fed is still hiking. Inflation, while we've seen recently good prints, perhaps isn't solved. So, I don't know if the earnings power of regional banks today are much better than they were 6 months ago or 3 months ago. But this just speaks, I guess, positioning more than anything. It's like where people aren't is where you want to be.
Fair enough. And hey, I will say, I'm becoming a little bit of a stickler because I feel like people are giving Powell too much hawkish credit. Not currently hiking, about to start hiking again next week, right? A week away, but currently on pause, Danny Kirsch. Don't forget.
Yeah, sorry. The pause and then the restart, and we'll see if it's just one more hike or if that's it. But yeah, fair enough.
Hey, how come it looks like from the options market, though, according to the charts that you sent me, is that it's more expensive to still hedge to the downside? Is that right? Even though markets have been firming up.
Yeah, I mean, it's pretty incredible, right? It's like think about the last 6 weeks. We've kind of been up every day or been up most days. Market's rallying. We're almost at, I think we're within 7% of the all-time highs in the S&P.
Yeah.
And what we're seeing is that calls relative to puts keep cheapening. And why is this happening? It's something we've thought a lot about. Like, why is something that keeps making money getting cheaper, especially in the S&P, the broader market? And part of it is realized vol overall is lower. But I think the other thing is that there's a lot of overwrite and a lot of different either ETFs or mutual funds that are selling call options. And I think this chart is really interesting. So what this shows is going out 6 months. So we're going out a little further. This shows the spread of selling a 20% out of the money put in the S&P. So let's say in SPY, that's roughly the 370 puts versus buying a 10% of the money call. So it'd be like the 500 calls.
Okay.
So it's 10% up versus 20% down roughly. And this is the spread. So basically saying puts are very expensive relative calls. This is the implied volatility spread. So this is
SSB money. That's
the
that's
takeaway
good.
being is puts are expensive to calls. And we were looking at this recently. We have clients keep asking like, well, how do I don't want to chase this higher, right? My Qs are up 40%. S&P is up 20%. I don't really believe in this rally.
It's still kind of going here.
But I need to have something. It's like, well, what we would say is like you should be using calls. They're incredibly cheap on an absolute basis. They're incredibly cheap relative to puts. And a trade that we've been doing and the trade we like is you can go out and buy a SPY DEES 500 call, sell a roughly 370, 375, 365, somewhere put in there for even money. So it's like you own the S&P down 25%. And you're long the market up 10%, and it's even money to do this trade. And let's say we get another further rally. Let's say earnings are stronger than better. You can sell a portion of your calls to cover your put. And in worst case scenarios, market sells off 25%. You own the market down 25%, assuming you hold a maturity. Obviously, there's mark-to-market risk in a trade like this. But because puts are so expensive relative to calls, you can own right tail extremely.
Back to green on barbecue, 38.74.
So these SPY DEES
Couple transactions over
$2. In February of this year, when the S&P was 10% lower, these calls were over $3. So they've gotten cheaper with the market higher because one, volatility is lower, and two, time decay. So for us, it's like, okay, market keeps going up, volatility keeps going down. How can I make money from this? Okay, buy calls. Yeah. They are historically cheap and to buy call options. I said this last time I was here too, and we talked about this, and it's like, well, this isn't even necessarily a very bullish trade, right? You could be you're short other things, you're short S&P futures, you're short stocks, like here's your hedge, or it could be I'm not long enough and this is your right tail hedge. So it's like, and also if you are very long, perhaps it's a good time to cut risk and buy calls instead. It's all the same thing. It's like calls are a less risky way to stay long than futures. Because who knows? The rug could be pulled. The rug could certainly be pulled. We've talked about this before. When the VIX is at 25, surprises are expected, right? The VIX is at 13 now. It just settled 13. Surprises are not expected. Something shocking could happen. Perhaps the market does sell off 5-10% on some random news no one expected. This is why you start swapping into extremely cheap call options.
And the calls that you're talking about are more aggressive calls, right? That's part of the reason why they're cheap. So if it doesn't work out, you're not spending a boatload relative to what you could get, and then they're so much more expensive than the equivalent puts that you can even snap up some puts too in case it blows up that way.
Well, so sorry, they're cheap relative to the equivalent put. So you paid basically on a relative basis. But yeah, I mean, if you want to hedge, sure, buy short dated puts. Those are very inexpensive. But I also say this is like so the S&P is up 17% this year, the first half of the year, right? 15%. Basically, they're saying it's like the market makers, the option market is saying we think there's a very low probability we'll be up another 10%. Okay, but maybe we will be. I don't know. I don't think anyone expected us to be up this much to start the year. So again, it's like, despite the fact it keeps working, it continues to be cheap. And some of that also is there's a large supply of overwriting flow, and that's a whole other can of worms. But regardless, it's like take advantage of the fact, take what the market's giving you. The market's telling you calls are cheap. Okay, so I'll buy those and maybe I'll sell some of my futures.
Love that. Calls are cheap and in trend, importantly here. So The options market has been pretty defiant in the face of the rally. Nice. All right. There we go. So
What do you know? 38.79 was that resistance.
We obviously had
back up at the resistance. Maybe turned it back into resistance. We'll see.
Bank one, which you nailed. So all right, now looking kind of where the risk reward favors to the upside, but also
pretty big bounce off of that sell-off. Must say that the exit could have waited all the way for that retest.
Freebie if you sell the call.
Well, I'll say this is also we're going into earnings season. You're seeing what's happening in regional banks. It's like better than expected news. It still seems to shock the market to the upside. Like the Microsoft news. You know, Microsoft is one of the biggest. I think it's the biggest market cap company in the world. Is up 5% on saying they're increasing pricing on their AI product suite. It just shows you maybe people are underinvested. Maybe there's still a lot of cash on the sidelines. Whatever it is, it still seems like there's a lot of money out there to chase this higher. And it's like when volatility gets this low, use it to your advantage.
All right. Message received. Always appreciate the sleuthing through the options, abnormalities, and opportunities. Thanks a lot, Danny.
Thanks for having me, Ajax.
Absolutely. I love that. All right, we got to figure out where that comes from. Danny Kirsch, Piper Sandler. All right, with the out-of-the-money calls, still probably not getting the pricing or the
John Jacob. Sounds like a totally legit name.
In the event of a big rip. Works if you own stock already or don't. Or sell them and then buy the downside puts for even less.
Chart looks pretty ugly.
Coming up, let's talk some feedback.
Usually you pumpers at least have a good looking chart.
Opportunities.
You're like 2 weeks late.
You know, there's going to be some AI in there, obviously, but
usually you guys come in here this day.
Hardware, how
or
about
this
the
day.
Software? We already know that Nvidia's been blowing out.
Still rallying there. It closed out too soon.
Without actually seeing the product just yet. We've only heard about it.
Wait for that high day, I guess. I think OTC is pretty different. Yeah, I think we're seeing a lot of trades on the lit market. Seems much more raw. Not high frequency trading on it. Hardly any dark pools. The unregulated market is way less corrupt. Imagine that. If you add regulation, you add regulators. Gives room for corruption. John Jacob. Yeah, go tell him what to pump, Cameron. Hey, Dink. Back west. Go pump back west. Carvana jacking up here in today.
Mapping out various genomic combinations and the impact of proteins is incredibly labor intensive. Processing power, artificial intelligence helps. We look at neuroscience, where really we think the next 10, 20 years is going to be as big a breakthrough as the last 10 or 20 were in genomics. That's going to take a lot of mapping, a lot of horsepower to really understand the neuronal connections in the human brain. And yet you have these two areas, they're benefiting from demographic trends. They're going to benefit massively, and we're going to see more breakthroughs as a result of artificial intelligence. And yet you look at genomics, or ETF as iDNA, it's actually down on the year. You look at neuroscience, IBRN, it's actually down on the year. So we think that investors who are looking a little bit deeper than just the traditional hardware, which you can get through our ETF,
I'm gonna do a recap video. Totally forgot.
Artificial intelligence software, which you can get through our ETF, IRB.
Still out here. Heck
really
yeah.
could look a little further
Yeah. Thanks guys for the support today.
Interesting value opportunities in places like
Thanks Mola for the donut this morning. Very generous. I appreciate it. Thank you guys for the likes. We didn't even do any like checks really today. You guys did all right though. 41. Everyone's not bad. Thanks Ace for the gifted membership. I'm gonna do a little overview of the Theta Farm, how it's going. And yeah, thanks for watching guys. Thanks for the support. Sub up, like up, comment down. Happy money sticks around. You on Discord? You on Twitter?
So actually,
at Happy Money YT, and we'll see you in the premiere. Video should be out hopefully by 4.
ETF, you're getting sort of
Like, check.
exposure.
And yeah, thanks guys. We'll see you there. Thanks Malava, thanks Guts, thanks Cameron, thanks Dink, thanks TJ, thanks John, Jacob, and Trace, Ace, Drew, all the homies, Mohammed, Duck.ai. Who are you? Julian, that tour. Thanks guys, thanks for support. We'll see you. Oh, thanks Sumi, coming out of the woods.